Market open a minute to go until the start of cash equities trading. I'm Anna Edwards, live in London with Tom Mackenzie.
Here are your top stories. We're counting down to critical inflation data out of the US later. Will it move the needle on expectations about the taper timeline? Protests break out as Evergrande's debt crisis deepens. The developer hires advisors to explore all feasible solutions to ease its cash crunch. Plus, Labour boost. UK payrolls top pre-pandemic levels as firms battle staff shortages caused by lockdowns and Brexit.
A lot of macro to focus on then, Tom. You've certainly been through the UK story there. We got that unemployment data at the top of the last hour. Very focused on the US CPI data coming later on during our trading day, of course. That will really be a focus for markets, despite perhaps the Fed playing down the significance as we look to labour markets stateside as well. Futures going into the market open to the downside. Tom, what do we see then at the start of this European trading session?
So over in the US, of course, they snapped 5 days of losses, posting a modest gain on Wall Street. Asia, you're seeing China lower, but it is Japan where the excitement is still. The Nikkei still close to those 1990s level if it closes at those highs, comfortably above that 30,000 level in Japan. The read across to Europe then, of course, we had those job numbers out of the UK. 241,000 new jobs, 241,000 in the month of August. Job openings jumping 35%. The FTSE 100, though, down 0.2%. Over in France, you had a Bank of France industry survey suggesting that sentiment is coming off a little bit within the industrial sector in France. The CAC 40 is currently down 6 points. Moving over to Spain, you're flat, just lower by 6 points or so. Germany remains in focus in terms of the politics. You have Armin Laschet there, who is still behind Olaf Scholz, pushing a law and order agenda. Will that cut through? So far, the polling suggests that he is comfortably in second place, not catching up with Olaf Scholz at this point. The Spanish IBEX, I've pointed, is essentially flat. In terms of the Italy index, the Italian index down 0.1%, the FTSE MIB. Anna.
So European equity markets then opening to the downside, just marginally so, though, at the aggregate level. The FTSE 100, as Tom pointed out, down by 0.2%, but fairly flat overall. The market really quite in limbo then, waiting for this US CPI print. The reading for August, that's certainly going to be firmly in focus for investors. Risks from the Delta variant and supply chain shocks have pushed costs higher. If consumer prices come in hotter than expected, the Fed could alter its taper timeline. Joining us now is Ian Steely, JP Morgan Asset Management International CIO for Fixed Income. Ian, very good to speak to you. So we're looking ahead to the CPI data later on today, the fourth straight month where CPI is expected to come in higher than 5%. I suppose when we see that number, higher than 5%, if it is, that won't be news, though, necessarily, Ian. So what would count as new news for you out of this inflation print later on?
I think the things that you need to continue to look at is the parts of the print that you could say are more structural. So looking at areas like the shelter component, things that aren't going to go away to the same extent that, say, used car prices are going to go away. So I think that's really what the Federal Reserve and the market will be focusing on, see whether this view that inflation is transitory and yes, we've peaked during the summer and we're going to come down, and by the second quarter of next year, we'll be back at that sort of 2 to 2.5%, which the Fed would like to see. Or actually, are there some components which are going to make it a little bit more sticky, make it a bit more challenging to get it down? And then that's when you're going to have a debate as to whether the Fed needs to be a bit more aggressive as it starts to normalize policy.
Ian, where does that leave your view then on the US 10-year yield, which is currently around, what, 1.33? It's been grinding. Well, it's been in something of a range, in fact, for the last couple of days. Is it capped at these levels, or does the CPI? Is there a number from the CPI print that can move yields higher from here?
I think if you got a blockbuster print from the CPI, obviously I think you would move higher. I do think the market's pretty much setting itself up though for the print to be good. We had stronger than expected PPI last week. If anything, maybe the risk today is that we don't quite meet expectations. You know, given things like used car price, they can't continue to go up at the rate they're going. I think what's going to be more important from sort of the 10-year point of view and yields in the US is what happens at the Fed meeting next week, and what are their statement of economic projections come out with for 2024, what the dot plots do, and what the market perceives to be the trajectory of how the Fed looks to normalize policy. I think that's going to have more impact than, say, today's CPI print, which I still feel the market and the Fed will be able to sort of look through to some extent, given the fact that we know it's going to be rolling over back into this year, early next year.
It does seem, Ian, as if the market is buying into this idea that inflation is going to be a transitory, or elevated inflation at least, is going to be a very transitory phenomenon. I wonder how inflation expectations play into all of that, though. I was looking at the New York Fed survey of inflation expectations amongst US consumers, hit a record. Data doesn't go back all that far, but it's still a record at 4%. Over a 3-year time horizon. If you look at market measures of inflations, though, around the 5-year time horizon, they don't seem to be all that elevated versus Fed goals. So how do you see inflation expectations playing in?
I actually think the risk is that inflation expectations pick up. I think that the risk is it's not as transitory as the Fed think it is, as maybe markets are pricing in. I think some of the areas like shelter, it seems to be moving higher. We know that there is a shortage of jobs out there at the moment. We know that there is going to be wage pressure on the back of that. So I think actually we might be here in, say, 6 months' time and surprised at how sticky some of the inflationary components are. And that is really going to give food for thought for central bankers as to how they deal with that. And it comes back to that kind of question that the market's been really debating for the last few months: is what is flexible average inflation targeting from a Federal Reserve standpoint? Does it mean they're happy for inflation to be so between 2.5% and 3%, or actually is that too much and they're going to feel the need to tighten into that?
Ian, talk to us about corporate issuance. We're seeing the likes of Coinbase getting in on the action now. There's a lot of demand, there's a lot of supply. Do these dynamics continue in a sustained way?
Yes, we've had phenomenal supply. So if I think back to last week, just in the investment grade space, we were expecting around 40 billion in the US. I think we ended up with about 78 billion, and spreads ended the week slightly tighter by a basis point or so. And we're already at very tight spreads. So there is just this phenomenal demand for bonds, for assets, for income at the moment. And I think a lot of that's down to the amount of liquidity in the system, the amount of support the central banks are continuing to provide, which again does mean, should we really be at these emergency levels of support from places like the Fed, places like the European Central Bank? It doesn't really feel that that's the case. But the question is, how do we go from A to B without causing the disruption that we saw during a taper tantrum of 2013? And that's really what central banks are trying to battle with at the moment. They're probably easing too much, considering what's going on in the economy at the moment, but they also don't want to cause any sort of disruption.
Ian Stealey, JP Morgan Asset Management International CIO for fixed income, we're very pleased to say, stays with us. Okay, coming up, RBA Governor Philip Lowe expects that a rate hike will not happen before 2024. More on that next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading day, and we are entirely unchanged across the stocks 600. A little bit more movement at the national level, as you can see there. Let's take a look at some of the stocks that are on the move this morning, though. We start with the Danish jewelry maker that is Pandora, often quite a volatile stock. And we've got an update through from Pandora this morning, which is really quite interesting. The stock up by just over 4%. They see organic growth of 5 to 7% during the 21 to 23 period, but really interesting because it taps also into this capex theme and investment theme, Tom, that we've been talking about with guests over the last couple of days. They're going to invest 1 billion Danish kroner in expanding their manufacturing capacity by around 60%, strengthening supply resilience, most of that capacity being built in Vietnam. Tom, what's the story at DSM?
DSM, so the Dutch life sciences group, saying that they are going to be restructuring part of the business, essentially. You're seeing this play out in a positive way for the stock this morning. You can see gains of more than 4%. They started a review of the materials. They're going to simplify the operating structure. It says the operating structure and reorganizing its health, nutrition and bioscience activities into 3 business groups. That's DSM in Holland.
That's DSM then, higher by 4%. Let's have a look at Allfunds. This is a story about a placing, essentially. A group of shareholders in this mutual fund distributor, Allfunds Group, are selling shares worth as much as 870 million euros in the company. It's an accelerated placement 5 months after the company started trading in Amsterdam. You can see the stock in response down by 4.9%.
Okay, that's a quick look at some of the corporate movers. Let's bring it back to the macro then. RBA Governor Philip Lowe has pushed back against market pricing for early interest rate increases. He's reiterated his expectation that a rate hike won't happen before 2024.
And I find it difficult to understand why rate rises are being priced in next year or in early 2023. While policy rates might be increased in other countries over this time frame, the wage and inflation experience in Australia is quite different to these other countries. So what's happening elsewhere in the world doesn't need to apply directly here.
Ian Steely, JP Morgan Asset Management International CIO for fixed income, is still with us. Ian, what is the read-through from the commentary that we've had from the RBA's Lowe then, pushing back on these expectations of a rate hike in Australia, amid, of course, their own Delta COVID concerns? And to what extent is this jawboning the currency lower? To what extent is this a playbook that other central banks will be looking at?
I think it's actually in line with what some of the other central banks are saying, because we have had the RBA reduce its purchases on a weekly basis, yet they're trying to go at lengths to explain that tapering isn't the same as tightening, and they want to get through the process of winding down, doing their quantitative easing program, and then have a period before we start discussing raising rates. And at the moment, the market's currently pricing a full rate hike from the RBA through next year, and you've got the RBA saying, actually, hang on a moment, we don't think we're going to 2024. So there is a little bit of a disconnect there. The RBA is going to be looking at the things you just mentioned. You know, the Delta variant has definitely caused some disruption in the Australian economy, particularly due to the slower pace of vaccinations we've seen over there. And when you look at forward inflation expectations, they're still pretty low and lower than what the RBA would like them to be. So I think it makes sense for what Lowe is saying at the moment. What will happen, what will be case to look at, will be whether they do get the Delta variant under control, and whether the Australian economy picks back up again, and whether it's just that what's happened has been a delay, not a destruction of sort of the good environment that we had seen in the build up to it.
And Ian, what's your thinking? What's the thinking in the market about these efforts that various central banks are making then to detach commentary around tapering of asset purchases and commentary around increased interest rates? Because many in the market surely see the two as, well, flowing one from the other. How is the market responding to all of these attempts by central bankers to detach the two?
I think you've got to say the market's responding pretty well at the moment. If you look at where stock prices are at the moment, if you look at where bond yields at the moment are at the moment, it does feel that the central bankers have definitely managed to do what they didn't do in 2013, which is persuade the market that tapering isn't tightening. And if you think back to 2013, at the same time that we had the taper announcement, we pretty much had the dot plots lifted quite considerably, and people were sort of reading through that once the QE programs were over, then you would automatically go straight onto rate hikes, and that isn't, or at least that's not being the read through we're seeing from the market at the moment. And to say risk markets like it, bond markets like it, so everyone seems to be happy with how central banks are dealing with things at the moment.
Ian, is the BOE an outlier? I mean, you look at the jobs numbers out of the UK today, arguably that could push them closer along their, what has been described by some as a more hawkish plan. How does the BOE weigh up the constraints around the job market shortages and these increased jobs numbers?
I mean, as you said, the jobs market looks pretty strong here in the UK at the moment. The data is very good. I do feel that the Bank of England's going to want to see a couple more data prints. We've obviously got the furlough scheme coming to the end. What does that mean to the job markets? But it does feel that it's incredibly hot at the moment, and we all know historically the UK is a higher inflation economy than a lot of other places around the world, and the Bank of England will be keeping a lot of focus on this. And it does also feel to me that they could well be the first of the major developed market central banks to look to move policy next year.
That's interesting, because there does seem to be increasing talk of that, Ian, and yet we've still got 1.6 million people on furlough. You mentioned furlough. Isn't that something of an overhang for the jobs market? We don't know what fraction of those will be reabsorbed into the businesses they came from, and the businesses take the hit, and what fraction will become unemployed, essentially.
No, completely, and that's the big question, and that's what the Bank of England will be looking for the next few job prints into the end of the year and maybe the very beginning of next year, to see whether those people on furlough do find their way into the jobs market, and whether we still have some of these if the market is still so hot once that actually occurs. So I think the Bank of England, although the market's going to like today's print and maybe get a little bit excited, I do feel the Bank of England will have some caution and just say, hold on, let's take a step back. Let's see what happens when all these policies come to an end, and let's look at it in a couple of months' time, end of this year, beginning of next year, and then make those decisions. And I say it could be the case that yes, the economy and the jobs market continues to be hot, and then the Bank of England have some thinking to do.
Okay, Ian, before we let you go, give us some of your conviction calls at this point.
Still feel that core government yields are a little bit low, considering how the recovery is going. I don't think we're going to rocket higher, but I do feel that into the year end we will move a little bit higher from where we are today. And then I know credit spreads are tight. I know no one can get really excited about corporate valuations at the moment, but the corporate health looks so good to us. Default rates continue to come down. We're on, at least in the US high yield market, to have the lowest default rate since 2007. We may even surpass that. So we do feel that there's still opportunities to own credit and pick up yield, pick up carry. And then one of the areas that has underperformed over the course of this year, or at least relative to the developed markets, is the emerging markets. We see vaccination rates picking up across the emerging world, and I think if we can get through the Delta variant, there are some opportunities to be had there.
Okay, yeah, you're really quiet perhaps in the corporate bond markets. Ian Stealey, thank you very much for your thoughts. Ian Stealey, JP Morgan Asset Management's International CIO for Fixed Income. Thanks for joining us on the European Market Open. Let's go to Bloomberg Business Flash. Top corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. Intuit has agreed to buy privately held email marketing firm MailChimp for $12 billion in cash and stock, uniting two providers of services for small businesses. The deal supplements Intuit's offering, which includes TurboTax and QuickBooks software. Apple says it's patched a security flaw in its Messages app, which allowed hackers to take over users' phones. The company will release software updates to patch the bug, which was first disclosed by a cyber research unit of the University of Toronto. South Korea has fined Google $177 million for hampering the development of rivals to its Android operating system. Separately, a Korean law forcing Google and Apple to open up their app stores to outside payment systems becomes effective today. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thank you very much indeed. Okay, coming up, Evergrande's crisis escalates. The developer issues a dire warning over its financial health as protesters call on the firm to make good on its promises. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The end of the Merkel era in Germany. Election of new leadership is coming. Join Francine Lacroix as she speaks with some of Germany's most powerful voices before the votes are cast on Germany Decides CEO Briefing, a live special Wednesday on Bloomberg Television and Radio.
Okay, welcome back to the Open. 21 minutes into the European trading day. Stocks across the Europe Stock 600 down 0.2%. The FTSE MIB over in Italy just clinging onto some gains. Bottom of the list across the region, you've got the CAC 40 down 0.7%. Okay, Evergrande's debt crisis is deepening. The developer has hired financial advisors to explore, quote, all feasible solutions to ease its cash crunch, warning there is no guarantee that it can meet its financial obligations. For more, we're joined by Bloomberg's Rebecca June-Wilkins. Rebecca, why are protests breaking out in China over the crisis at Evergrande? Get us up to speed. I know you've been following this from day one, really.
Yeah, so we have protesters among the kind of home buyers, among the retail investors, and even among some of its employees. So employees in Shenyang were protesting over the weekend, and then on late Monday, police actually stepped in Shenzhen's headquarters to close down protests that were going on there.
So there's a lot of protest activity and protesters from different angles, as you point out then, Rebecca. So what is next for Evergrande? We've heard then about the appointment of various advisors. Where does this take us in the story?
Absolutely. So there are two key things that kind of Evergrande and policymakers will be looking out for. On the one hand, they'll be looking to quell any kind of social unrest that is spreading out and try and stop that from spreading across China. On the other hand, of course, we do see the kind of crisis at Evergrande potentially deepening. They've hired these two financial advisors to help resolve and see how they can find a resolution to some of its debt pressures. We're also watching closely these coupon payments. So Fitch, when it downgraded the firm last week, warned that there's an increased chance of default on the coupons for its dollar bonds, about 670 million of those coming due through the end of this year.
Okay, Rebecca, I know you're in the weeds when it comes to the broader credit markets in China. How is this all playing out there?
Well, interestingly, we've actually seen contagion relatively well contained so far. In August, yields really did climb, but actually, overall, we see the sort of stress contained among this very small group of kind of weaker rated smaller property firms. More widely onshore and offshore, markets actually looking relatively robust, and primary markets very, very busy with borrowers coming today.
Rebecca, thank you very much. Bloomberg's Rebecca June-Wilkins joining us there with the latest on Evergrande, and Tom, crucially, the latest on what this is doing to credit markets more broadly, because people are starting to ask questions about whether this would become systemic if, as Evergrande says, it is not able to meet its financial obligations. That's still just a possible at the moment, isn't it? People asking whether this becomes systemic. I know Maybank Securities saying no, they don't think so, but it's a question being asked.
Yeah, certainly in the last few years, a lot of people have built up faith in the way that Chinese officials deal with these issues. But then we saw what happened with Huarong, and our own reporting from Bloomberg suggesting that they were passing the buck between ministries and different arms of the government, and it got very messy. So the question is that the backstory here at Evergrande, and therefore does that pose a systemic risk? I still find it very hard to see how Beijing makes this and allows this to become another Lehman moment, or a Lehman moment for China, I should say, because they're so concerned about broader stability. But clearly we're getting very close to the fire here.
And isn't there often this assumption in China, broadly from the international community, that there is some sort of government backstop? And so we'll see how that all plays out. Meanwhile, according to Citi, distressed debt investors are increasingly looking at Evergrande. Citi warning, though, that the offshore dollar bonds are not as high up the capital structure as some of the others. So if we did see this getting, to that final sort of end game, then just raising a few flags there. But there's a lot we don't know still about the way this is going to play out, essentially.
Absolutely, and we had our own Shuli Ren from Bloomberg Opinion pointing out the differences in the way that China deals with these issues. And you have protesters on the street. Who's going to be handed their money back first? Probably them versus an international investor in the US bond space when it comes to Evergrande. So how that breaks down, how that plays through, has implications, of course, for those investors.
Yeah, as we said, a number of different protesters, and some of them wanting their money back from those wealth products they put their money into. Now, coming up on this program, we'll pivot to crypto. The creator of Litecoin on the hoax tying the retailer Walmart to a crypto deal. Our interview with Charlie Lee is up shortly. Really fascinating story here. It was essentially entirely fake news that there was a deal between Walmart and Litecoin, but that didn't stop one of the Litecoin employees from being a little misled by this fake news story, retweeted it, and it had an impact on the share, on the price of Litecoin, essentially. So we'll get into that conversation. What did Charlie Lee have to say about the company's performance in this situation? More on that next. This is Bloomberg.
Electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose with this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. 30 minutes into European trading day, here are your top stories. We're counting down to critical inflation data out of the United States later on. Will it move the needle on expectations about the taper timeline from the Fed? Protests break out as Evergrande's debt crisis deepens. The developer hires advisors to explore all feasible solutions to ease its cash crunch. Plus, labour boost. UK payrolls top pre-pandemic levels as firms battle staff shortages caused by lockdown and Brexit. So half an hour, Tom, into our European trading session. And actually, we're losing momentum a little bit, it seems, on these European equity markets. Waiting, well, we've had some data out from the UK today, but waiting crucially for that US CPI print.
Yes, and what it tells us about the time frame and the timeline for the Fed's taper, of course. You're right, of course, the US closed up just about eking out some gains after 5 days of losses. The Asian session was a bit weaker. The Nikkei over in Japan was a standout there. In terms of what's happening in Europe, weaker by 0.2% across the broader index, the Stocks Europe 600. The FTSE 100, of course, we had those jobs data coming in, 241,000 additional jobs. We also have a report from the Sun newspaper that the government here in London is looking at some pretty significant changes, relaxation of some of the curbs around travel. Nonetheless, the FTSE 100 down about 0.4%. Over in Germany, the politics are still dominating. Armin Laschet focusing on law and order, so far not doing much good in terms of the poll numbers. The DAX is flat. Over in France, the CAC 40 down 0.7%. The Bank of France coming out with an industry survey suggesting that sentiment is souring, just at the edges at least. Let's look at how things are breaking down sector by sector then across the European space. Auto parts at the top of the list, up just 0.1%. Technology just about gaining here in the European session. Don't forget as well, a big call out from JP Morgan, Kalanovic and team saying that over in the US at least, it is time to cut back on tech and move towards the reopening trade. At the bottom of the list here in terms of sectors in Europe, basic resources down almost 2%, down 1.7%. Okay, let's get the business flash, Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Spain is to limit windfall profits for power utilities by capping gas and electricity bills. A global shortage of natural gas has pushed Europe's energy prices to record highs. Spain is particularly vulnerable, with a large proportion of its electricity generated by burning gas. Intuit has agreed to buy privately held email marketing firm MailChimp for $12 billion in cash and stock, uniting two providers of services for small businesses. The deal supplements Intuit's offering, which includes TurboTax and QuickBooks software. Oracle shares declined after reporting sales that fell short of estimates, with demand for key cloud products slowing from the previous quarter. The world's second largest software maker reported a 4% rise in revenue, coming in at $9.7 billion. Oracle gave a full-year profit forecast that topped projections. Apple says it's patched a security flaw in its Messages app, which allowed hackers to take over users' phones. The company will release software updates to patch the bug, which was first disclosed by a cyber research unit of the University of Toronto. That's the Bloomberg Business Flash. Tom, Anna.
Okay, Laura, thank you very much indeed. And as we've just been hearing, Europe's energy crunch is deepening with gas prices hitting fresh records. UK gas futures have climbed to over 160 pence a therm. The situation could get worse with only a month to go before the heating season. Europe doesn't have enough natural gas in storage sites.
Joining us now is Bloomberg's energy reporter then, Verity Ratcliffe. Verity, good to speak to you. We're looking at some slightly alarming looking charts on what's been happening to gas prices of late. Remind us what's driving gas prices higher at a time when, you know, many people in the Northern Hemisphere haven't yet sought the heating.
Yeah, as you say, the prices have been surging to multi-year highs across the board in Europe, and they've been climbing for quite a while now. The drivers all seem to be about supply, but they differ by region. So in Europe, we're seeing a lot of fears about Russian supplies, which is obviously the biggest supplier into the continent. There are some fears that, you know, they need to keep some for their own needs, and also there's a lot of maintenance going on, which we wouldn't ordinarily see this late into the season. From Norway, the UK, Algeria, and that sort of thing. But there's also other drivers around the world as well. You know, the Gulf of Mexico, there are some production concerns, that's still a big issue. And of course, now we have so much more liquefied natural gas, which ties all those different markets together. So all of these places are struggling on the supply front, and that's sort of leading to some sort of contagion as well. Norway, the UK.
Okay, how long do we know this is going to go on for? I mean, do we have a sense of the time frame? Is it 3 months, 6 months? Where's the relief?
It's difficult to say. As you mentioned at the beginning, European storage is at just 70% full, which sounds like a lot, but we're going to start drawing down at the end of October, starting the end of October. So it's difficult to say. There's a lot of attention now focused on predictions for the weather over the winter. I saw there was a prediction of quite a mild winter, so a lot will hinge on that.
Okay, Bloomberg's energy reporter, Verity Ratcliffe, getting us up to speed with the pressures in the gas space, what it means for prices and the time frame. Okay, the creator of Litecoin says that the foundation will be more careful about what they tweet in the aftermath of the false announcement about a partnership with Walmart. Charlie Lee spoke to Bloomberg about the hoax.
The thing is, with Litecoin, a decentralized cryptocurrency, anyone can really start supporting it and accepting it without talking to me or without going through the Litecoin Foundation. So what happened was this news got released by Global Newswire and Reuters, and one of our social media guys saw it and actually thought it was true because it was reported by Reuters, and he retweeted it, and then 15 minutes later he immediately saw that it was a fake news, so he deleted that tweet.
Now, are there any efforts to make whoever is behind this accountable? Like, if this was a pump and dump effort, can you track who's behind this, or somehow track the trader who was involved?
I guess it's possible. I'm sure Global Newswire is in contact with the person who submitted this news report, so they can try to figure out who did it. In terms of us as Litecoin Foundation, there's not much we can do. I mean, people can release fake news for cryptocurrencies all the time. Actually, this happens with traditional stock market also. So it's not just in cryptocurrency.
Global Newswire did just come out with a statement saying they're enhancing authentication steps after the fake release. They will work with authorities on a full probe. They say the incident was, quote, isolated, never happened before. You know, Litecoin itself, you know, as you said the release was fake, said the quotes were fabricated, said someone on the social media team got a little too eager when they retweeted this. But Litecoin did pop big time on this quote-unquote news, now that we know it's fake news. To those who might suspect someone on your end is responsible, what would you say?
I mean, it's definitely not anyone on our end. Litecoin being a decentralized cryptocurrency, pretty much it's anyone can, if they want the price to pump, they can potentially release these fake news. So I'm going to deny it that it has anything to do with us, and we'll try our best to figure out who did it, and we will stop fake news from spreading.
What internal compliance changes are you making as a result of today's events?
Well, we realize how powerful our Twitter handle is, right? So we want to make sure that we don't retweet fake news. We want to double check and make sure it goes through some checks before we actually tweet anything. So that's something we definitely have to improve on.
Litecoin is still very volatile generally. How much is it actually used in payments today? What are you doing to encourage future use in payments? And I wonder, is this at all a setback?
Well, Litecoin is used quite a bit for payments. I mean, it's not as popular as Bitcoin per se, but it's used quite a bit. There's tens of thousands, maybe hundreds of thousands of merchants. It's hard to know exactly how many merchants support Litecoin. But we do know from on-chain transactions that about $3 billion worth of Litecoin is sent every day. So of course, not all of that is for payments. Some of it is people just moving the Litecoins around or through exchanges. But a lot of that is actually people paying for stuff using the Litecoin network because the transactions are fast and it's cheap and it just works. Litecoin has been around for almost 10 years now. Actually, next month is our 10-year anniversary. So over that span of 10 years, there's over $1 trillion worth of Litecoin sent over the network. So it shows that Litecoin is actually being used and it's pretty popular.
The creator of cryptocurrency Litecoin there, Charlie Lee, on the false announcements about a partnership with Walmart. Coming up on this program then, UK payrolls climb above pre-pandemic levels. Job vacancies hit a record high. Britain's economic recovery continues as the furlough scheme starts to wind down. More on the UK story next. This is Bloomberg.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Welcome back to the Open. We are 42 minutes into the European trading day. The stock's Euro 600, currently down 0.3%. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. Norway's opposition Labour Party will begin talks on forming a new rolling coalition after winning an election dominated by disputes over the country's dependence on fossil fuel. A likely coalition led by the pro-oil Labour Party and headed by millionaire Jonas Gahr Store is poised to secure a 5-seat majority, according to preliminary results. That would allow it to oust the Conservative-led alliance that's been in power for 2 terms. Boris Johnson is to confirm that booster vaccinations will be rolled out to the most vulnerable people this autumn as he sets out the UK's new approach to tackling the virus later today. The government has already confirmed that 12 to 15-year-olds in England will be offered a single vaccine shot from next week. Australia, meanwhile, says it's developing a digital vaccination pass in a step toward further reopening its borders. The country has been mostly closed to non-residents since March of last year. President Biden will host the leaders of India, Japan and Australia next week for discussions that will include countering China's expanding influence in the Asia-Pacific. The first in-person summit for a group known as the Quad will help Biden's goal of making the region a top priority for foreign policy. The agenda will also include the pandemic and climate change. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Laura, thank you. Laura Wright in London with your First Word News update. Now, the number of workers on UK company payrolls has climbed above its pre-pandemic level. The figures from the Office for National Statistics suggest that the labour market has remained vigorous over the summer, despite a surge in virus cases. Vacancies have hit a record high, but there's a mismatch between the people out of work and the skills needed in the post-pandemic economy. Supply chains are showing signs of strain as key jobs like truck drivers remain unfilled. Bloomberg's Lizzie Burden reports.
Brexit and COVID have worsened a trucker shortage in the UK that's wreaking havoc on supply chains and leading to shortages on shelves. Conditions for drivers are so bad that even offers of bonuses from supermarkets can't lure new recruits, and a testing backlog is slowing the flow of those who can be persuaded to sign up. With about 1.6 million people still on furlough and warnings of a spike in unemployment when government support ends on the 30th of September, how hard can it be to retrain as a lorry driver? I'm here at HGVT's Wolverhampton Testing and Training Centre to find out. How long would it take a person to retrain?
4 days training.
and then your test on 50.
Super fast. So what's the problem? Why have we got this shortage?
There are issues that were building up prior to COVID, such as the ageing workforce within the driving community, people retiring and no new blood coming in. COVID has exemplified that from March 2020 to April 2021. No training could be done whatsoever, and it's taken the DVLA, who processed the licenses, a long time to catch up on a backlog.
We're just not getting the drivers in that we need at the moment, and as we know, because of Brexit, a lot of the foreign drivers that we did have here have went back home.
And the problems with, I said, with getting new blood in is that it's a relatively expensive course. It costs about £4,000, and that is putting these thousands of people who would become HGV drivers off, even though at the end there's some very well-paid jobs available.
It's because of COVID, because I'm here. I lost my job because of COVID. I'm actually enjoying it, and I'm being told by my instructors I'm doing really well. So, yeah, I can't wait to get my test out there and get on the road.
The big question now is whether companies will permanently raise wages to attract workers, and most importantly, whether they'll pass those higher costs onto you, the consumer. If they do, you may see the Bank of England hike interest rates sooner rather than later.
Lizzie Burden reporting there, and Lizzie joins us now in studio. Good morning to you, Lizzie. So how are these labour shortages, you document there the story around one particular sector, how are these shortages of labour in certain industries affecting the economy?
Well, in the case of truckers, even though supermarkets are offering bonuses, you're still seeing shortages on shelves. And some retailers are warning that those shortages could last until Christmas. But it's not just truckers, it's factory workers, it's fruit pickers. So across sectors, you could see companies raising wages to law workers. We've seen average earnings in the jobs data today climbed 8.3% in the quarter through July year on year. So the question is whether they get passed on to consumers. We'll see that in the inflation data.
OK, and Lizzie, of course, we got the jobs data out from the UK today, 241,000 for the month of August, and then job openings picking up as well. What are you reading into the significance of these numbers?
Well, they're unbelievably good. I mean, it's looking like the labour market defied the economic slowdown in August, despite this rise in cases. As you say, payrolls are back above pre-pandemic records. At the same time, though, vacancies hit a record high. The British Chamber of Commerce is calling it a hiring crisis. So the question is, what happens to the people who are still on furlough when the scheme ends? There were 1.6 million people, as you heard in that report, still on furlough in August. And there isn't much sign of redundancies yet in this jobs data today. That could change next month. But an even bigger headache than unemployment will be getting people into jobs, says the Governor of the Bank of England, Andrew Bailey, because of this mismatch in skills. And if that retraining takes time, because of the slack in the economy, it could push down inflationary pressures, push back when the Bank of England hikes rates. According to Goldman, it says that the first post-pandemic rate hike won't come till the third quarter of 2022. So the MPC will be really weighing up this data carefully.
Yeah, we'll certainly see what happens to expectations for rate hikes when we get a sense of what happens to all those 1.6 million people on furlough then, Lizzie, because we don't really know right now what proportion of those end up back with the businesses on full pay with the businesses that they came from, and what proportion end up adding to unemployment numbers. Lizzie, thank you very much. Bloomberg's Lizzie Burden with the latest on the UK. Coming up here then, we've been talking a lot about inflation in the UK today, but the story in terms of the data will be around the US. All eyes will be on that US CPI print later on today. How will the data influence expectations about the Fed's tapering timeline? We'll discuss that next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European market open. 8:52 in London, so 52 minutes of equity market trading behind us. And we can see modest losses across European equity markets, slightly greater on the FTSE 100. We've got consumer products, in particular the luxury end of the spectrum, selling off a little bit this morning. And we also have basic resources selling off. That's why London is a little weaker, down by 0.5%. The luxury goods story weighing on the French market then, Tom.
Okay, so from luxury goods and the high earners who might pick up those pieces
Nice.
to the tax debate. See what I did there? Let's get a switch then to what was happening in the US overnight. It'll make sense in a second. Progressive Democrats, it's a Democratic Congresswoman AOC, or Alexandra Ocasio-Cortez, used the Met Gala. It is the busiest event on the New York calendar to make a political statement. You can see she's wearing a dress with a bold message splashed across the back that read, "Tax the rich," not eat the rich, tax the rich. AOC made her statement as deep divisions within the Democratic Party are adding to uncertainty about the size and scope of President Biden's tax and spending plans. She is a social media genius, isn't she? I mean, this reminds me a bit of Lady Gaga's blood meat, raw meat dress.
Well,
so maybe she's took some cues there. But
take some inspiration from that. Well, it worked, and so, you know, we're talking about it, aren't we? It certainly made some headlines. I mean, if you're going to make a statement, she can't be accused of talking to the converted, can she? Because she went to a place that it costs a lot of money to enter.
$35,000
a ticket.
$35,000.
Yeah, full of tycoons, I think is the word, and celebrities, and she makes the statement there. So that's of interest. But not everybody in the Democratic Party shares her view about the extent to which you want to put up those taxes, as per the story that we covered a lot yesterday.
Yeah, absolutely. Okay.
Back to the markets now. Stocks and US futures slip ahead of today's CPI release. Ven Ram is with us from our Markets Live team, not poring over the details, the dresses that were worn at the Met Gala yesterday. Ven, very much your eyes on the data, on the US CPI data and what it might do to treasuries. 1.33 is the yield on the US 10-year. What are you watching for then that could really change that bond market as we look at this US CPI data?
Morning, Anna. Let's see what does change the U.S. trajectory. We are expecting another 5% plus print for August. Given the PPI readings that we saw last week, those were pretty elevated. And given that, it's eminently possible that there may be upside risks to today's reading. However, no matter what the objectives and size and scope on the print are, we will not get a profound reaction in rates. Why is that? That's because U.S. inflation break-evens and five-year inflation swaps have been range-bound for a while now. So the market is very much saying, yes, inflation will be elevated this year. We already know that. Everyone knows that. But for how long is the question? Unfortunately, we are likely to get some clarity on that only in the first and second quarters of next year. That means any reaction that we get immediately after the data today will be a knee-jerk, short-term, very short-term reaction that will fade within hours.
Okay. Ben Ram, we're seeing UK bonds selling off. The 5-year yield at its highest since March 2020. We had the jobs data, of course, for the month of August, 241,000, back to, or higher than pre-pandemic levels. Does this shift the needle for the BOE?
I think, Tom, it is definitely shifting the needle for the BOE, albeit slowly and steadily. As we said, the jobs market is more or less evolving as expected, and the forecast for tomorrow's inflation data suggests that we may even see a 3% print. That will be something. All these mean that the markets are pricing in something like a 50 basis point hike over the next 2 years, which explains why the front-end gilt yields have risen sharply in the past month, and as you alluded to, the 5-year yield as well. However, we are unlikely to get a BOE rate hike before next year, simply because the BOE may want to see how the economy holds up after the furlough program ends, which you've been talking about, and also given its chance that inflation will fall back to 2% next year.
Excellent. Yes, absolutely. That furlough word getting a lot of mentions today then, Vem, is crucial when you're looking at the complete picture on UK jobs. Ben Ram from our Markets Live team, thank you very much for joining us. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
after 15, 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
People can release fake news for cryptocurrencies all the time. Actually, this happens with traditional stock market also.
By the way, I'm not worried about this year's performance. Just saying, we have a 5-year time horizon.
You know, the potential for oil prices to explode to the upside is increasing, particularly if you don't get Iran.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 14th of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Apple rushes to block a security flaw in its Message app after security researchers spot a so-called zero-click vulnerability. UK payrolls hit pre-pandemic levels as the government is expected to unveil a booster shot program later today. Protests break out as Evergrande's, debt crisis deepens. The developer hires advisors to explore all feasible solutions to ease its cash crunch. So first thing is first, let's check in on the markets. It's Tuesday, all ahead of that CPI data in the U.S. We're seeing a little bit of swings, but actually we're seeing also green on the screen. Let's bring it up for you. The stock 600, there you go, was gaining about 10, 15 minutes ago. Now it's down some 0.2%. The focus is not only on some of the stocks, but also we had a little bit of concern about projections, for example, for exactly what we could expecting in terms of revenue for the future. Now, if you look at European stocks, look, they're climbing ahead of this inflation data in certain sectors. They could color expectations about the Fed's likely timeline for repairing stimulus. The other story is, of course, crude oil. And if you look at oil rising for a third day as investors tracking a storm menacing the Gulf of Mexico. This is a picture for stocks across the board. I think the FTSE is gaining some 0.1%, maybe actually it's down 0.2%, one of the biggest losers in today's trading session. And then we also have the IEA report saying the world must await for extra oil, one of the basic resources, one of the groups losing the most. Now let's take a broader look at the markets with our Eddie van der Walt from the Bloomberg Markets Live team joining us. Okay, Eddie, we have if you look at the markets, they're kind of all over the place. So they're waiting for CPI, they're looking at oil. What really caught your attention today?
Look, the oil price is definitely important, and we are seeing, a potential for feed through into wider markets because it is obviously very inflationary, but inflation is the big player in markets at the moment. The CPI number cannot be understated. I think, really for markets, this is more important than the jobs data because it tells us what the Fed's going to do. It tells us when we're going to get that tapering. So really, I think all eyes on CPI. So it's not surprising that people don't want to take excess positions other than where there is specific effects like in the world market right now.
Okay, so we're looking at oil, and we have the IEA report, which we'll talk about in a second. Eddie, overall, are we concerned about valuations, or is it really all about Fed expectations?
I think it's a lot about Fed expectations. I think I think right now, I think we've seen that the market trades on tapering more than anything else. We will care about things like Apple product launches and all of these side stories, and they will have an impact on specific commodities, on specific stocks, on specific companies. But I think for the wider mood in markets, I think there is no bigger player than the Fed at the moment.
Eddie, we spoke to Jeffrey Curry, of course, of Goldman Sachs, head of commodities, and this is what he had to say on oil.
Market's in a deficit. You've already exhausted the pandemic inventory glut. So you're slowly getting to a point. You get any type of disruption as you go into the autumn, the potential for oil prices to explode to the upside is increasing, particularly if you don't get Iran.
I mean, what actually happens if you have an investment and if just predictions come right? What happens to stocks overall?
Yeah, I think, look, if we see oil prices and energy prices broadly have been very bullish. If we see an explosion higher in these prices, I think that what we see is a knock-on implication for inflation, which is really reliant on where energy prices sit. And then I think then we could see stocks pull back much faster than people expect.
Eddie, there's quite a lot going on with crypto. Right. I mean, what exactly the markets is trying to recover from what we saw with Bitcoin yesterday?
There's always a lot going on in crypto. It's the funnest beat on the planet. Look, yesterday's news where we had this, fake news coming out, and even some of the, Litecoin's own Twitter account being fooled by it. It just. I tell you what, we've given back all of those gains, but what it showed me is that the crypto market is looking for good news and is willing to rally, because we had Litecoin up something like 30%, and we had Bitcoin up, 4% at one point. So it shows me that if we get an announcement that is real, something like an ETF in the US, there could be a significant inflow of funds. This is a market that is sitting waiting to rally.
It's roaring, raving to go. Right. Eddie, we also spoke to Charlie Lee, the founder of Bitcoin, after the hoax was revealed. Here he is.
There's not much we can do. I mean, people can release fake news for cryptocurrencies all the time. Actually, this happens with traditional stock market also. So it's not just in cryptocurrency.
Well, that was, of course, the Litecoin founder, Charlie Lee. Eddie, I mean, when you look at, is it Ethereum? Yesterday we were talking about stable coins. So how do I look at the complex as a whole?
There's this really long-term story that's happening in cryptocurrencies about the future of what is a cryptocurrency and what is it going to do for us in the future. And the El Salvador story was part of one story where Bitcoin overtakes, the dollar and becomes the world's global currency, whereas Ethereum, it wants to do something very different. It wants to be a method for settling contracts, for replacing exchanges in many ways, right? And options contracts and those sorts of things. And I think in the long-term story, the DeFi story is much more exciting for cryptocurrencies like Ethereum than for replacing the dollar. I think, central bankers will have an awful lot to say yet on that other topic.
Eddie, thanks so much. Eddie van der Walt there from our Bloomberg Markets live team. Now, coming up, as traders wait for CPI data from the U.S., we'll also speak with the UBS chief strategist, Banu Baweja, and then a little bit later on, S4 chairman Martin Searle joins this program. If you have any questions for either of our guests, write to us, IB plus TV Go. This is Bloomberg.
Come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at some of the key things that we're looking at for today and the all-important U.S. CPI figure that comes out at 1:30 p.m. UK time. Over in Israel, we have GDP and CPI data. Then Chinese Foreign Minister Wang Yi visits his South Korean counterpart to exchange views on regional and global issues. And Apple will be rolling out its biggest product launch of the year as it unveils the latest line of iPhones and other products. Now, to talk about the markets, to talk about maybe some of these events that we're waiting for, Banu Baweja, Chief Strategist at UBS Investment Bank. Banu, it's a great pleasure to speak to you about the markets and everything in between. It seems that inflation is really left, right, and center to give us some kind of indication of what the Fed does that will therefore dictate the markets. What exactly is priced into these markets?
Yeah, look, we've got to think separately about the quantity of money, so the taper question, and the price of money, the hiking question. That was the key point that Powell also made during his Jackson Hole speech. So there has been enough progress in the labor market. Primarily the labor market is what we're concerned about to assess that we are going to get taper in November, probably latest by December. But I don't think we'll have enough here on the CPI figure to actually ratchet up expectations of a rate hike anytime soon. Francine, the way I think about CPI is that you really have to separate it into 3 buckets. One's the pandemic basket, used cars, airline tickets, and everything else. The other one's rent, and then there's a third category of everything else. What's really important is that that third category has not yet become infected. It's really been about this narrow sliver, the pandemic basket, that's been driving the overall inflation, and that has begun to come down. So this time we're expecting about 0.5% month over month, but next month we are looking for used car prices to come down significantly enough that we actually go back to somewhat normal-looking CPI prints, like 0.13% month on month. That'll be the September print released in October. So despite the fact that rent is heating up and the Fed will pay attention to that, the overall move in CPI will be lower over the coming months because the pandemic-related basket is going to be coming off. And despite that, the Fed will look at progress in the labor market, increases in rent, and will move towards taper. I think that motion is likely to come through anyway.
But Banu, so a taper, is it also an interest rate rise? How, if you look at inflation, so how difficult is it going to continue with that narrative that actually is transitory?
I don't think that will be tough. In fact, our expectations of inflation for 2022 are well below the Fed's, right? So we think that the move from goods towards services is going to mean that goods price inflation is going to come lower significantly. And in fact, the transitory component of inflation is coming off, and that's why headline inflation will come off, even if some parts like rent are heating up. So next year, the Fed expects core PCE at about 2.1%. We think it's more likely than not going to be about 1.6%. So we think actually more and more the Fed's narrative of transitory inflation is going to be validated, perhaps even more so than their own forecasts suggest. Taper, nonetheless, will have an impact because the demand and supply of tips, which really is at the center of why real interest rates in the US are as low as they are, is going to be impacted. the demand for tips is going to come down as headline inflation comes down, and the supply of tips is going to increase as the Fed steps away from the tips market through its taper. So we expect real interest rates to rise because of not higher inflation, but the Fed's tapering. So we think real interest rates are much too low here, but that doesn't mean that inflation expectations are headed higher. In fact, inflation expectations are likely to come lower by about 10 to 20 basis points by the end of this year.
So, Banu, what does that exactly mean for the equity markets, and what does it mean for fixed income?
Right. So real interest rates going up is never a good thing for the equity markets. The good news today is that the equity risk premium is high enough that you can probably absorb about a 30 to 40 basis points increase in real interest rates. Now, around late November, you're going to have a clash of two forces, Francine. Number one, higher real interest rates, if our theory of taper is correct. And number two, earnings momentum waning, getting closer to zero for some sectors. For the overall market, it's probably going to get closer to zero by the end of Q1 next year, which I think is going to be the high of the market. But for certain sectors, materials, energy, industrials, it may get close to zero as early as November. So we do think that there will be a modest correction in the market late October, early November. So there will be a read-through, both because of real interest rates, but also because of waning earnings momentum late October, early November. So there will be a minor correction in the market. Eventually, higher earnings momentum is going to win the day until late Q1, which is, I think, going to be the peak in the market.
Banu, so given what you've just explained, what is actually the most interesting thing out there that you could be buying right now? Is there a part of the market that is unloved that will resurface?
Yeah, no, I think, look, tech and communication services are certainly not unloved, but if you look at the difference between what's happened to tech in developed markets and what's happened to tech in some of the other parts of the world like Korea, Taiwan, it's night and day. I mean, large parts of tech in Asia have not yet moved. I think China internet also becoming cheaper and cheaper by the day because of regulatory fears, which are legitimate fears, but I think eventually this is not an existential threat to tech, internet, or hardware tech in Asia as it was for the education sector. You just need cheaper valuations. So that's one sector which is becoming cheaper, one part of the market that's becoming cheaper that I think is going to become quite interesting by the end of this year, especially if we are right on inflation coming off substantially and the Fed potentially turning a little more dovish in Q1 of next year, very contrary to the narrative that we have right now, which is the Fed is going to be hawkish ahead of taper. So I think that's one part of the market we will be focused on. We're not there yet, but China, internet, and broader North Asia is where we are thinking of focusing our attention in the coming 3 to 6 months.
So, Banu, what are you expecting actually central banks from emerging markets to do? We saw a hint of it with the bank over in South Korea. Are we going to see just more and more hawkish talk also in other parts of the world?
Do you know, Francine, we really have to be careful here because I think you have to think about why central banks are being hawkish, right? Consider I think there are at least 3 types of central banks. So the first one is developed market central banks, RBNZ, BOE, the Fed. They're hawkish for classic Phillips curve reasons. Emerging market central banks, most of them are not hawkish because the output gap is closing or the labor market's on fire, as it is in the US. They're hawkish because they are trying to limit inflation expectations going up, which means that their hiking cycles are actually going to be shallower. Russia, Mexico, South Africa, India, Indonesia, all of these central banks are not sitting on economies that are red hot, but they're sitting on inflation that's rising because of inflation expectations. Historically, they've had a problem. The third category, where China sits alone, is one where central bank or the overall monetary policy setup is more hawkish because of a completely different reason, financial stability. It's trying to rein in the excesses in the housing market, and that's where I think the longest tightening could be observed. So China sits alone, hawkish because of financial stability. Emerging markets, by and large, because of inflation expectations. Only the G10 central banks are hiking because output gaps are closed. So we really have to understand the wavelength of the hiking cycle is probably going to be the least in these emerging markets and the highest in China outside of all of those emerging markets. And G10 central banks like the Fed, RBNZ, BOE are probably somewhere in the middle.
Banu, thanks so much. Banu Baweja, their chief strategist at UBS Investment Bank, stays with us. Now, coming up, we talk more with Banu on what to expect from the Chinese economy data tomorrow. His thoughts, more thoughts on emerging markets and the Delta variant. That's coming up shortly, and this is Bloomberg.
didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
The growth story in cannabis remains very strong, even after the sort of the loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Norway's opposition Labour Party will begin talks on forming a new ruling coalition after winning an election dominated by disputes over the country's dependence on fossil fuel. A likely coalition led by the pro-oil Labour Party and headed by millionaire Jonas Gahr Store is poised to secure a 5-seat majority according to preliminary results that would allow it to oust the Conservative-led alliance that has been in power for 2 terms. Now, Boris Johnson is to confirm that booster vaccines will be rolled out to the most vulnerable people this autumn as he sets out the UK's new approach to tackling the virus later today. The government has already confirmed that 12 to 15-year-olds here in England will be offered a single vaccine shot from next week. Australia, meanwhile, says it's developing a digital vaccination pass in a step towards further really reopening its borders. The country has been mostly closed to non-residents, and that was since March last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Oh, Leanne, thanks so much. Now, China's economy probably slowed further in August. A data on consumption, industrial output, and investment due tomorrow will reveal the extent of the damage caused by an outbreak of the Delta variant. Investors will also be closely watching for any signs that the ongoing regulatory crackdown has exacerbated the recent economic weakness. Well, still with us, Banu Baweja, the chief strategist at UBS. Banu, we talked a little bit about emerging markets. We talked a little bit about U.S. inflation. What do you do with gold right now?
So I think with real interest rates rising from here, which is likely, I think temporarily gold is likely to be under a little bit of pressure. But I think the relationship between gold and real interest rates is actually going to become weaker over time because of portfolio diversification. In a 60-40 portfolio, people will still be looking for alternative stores of wealth. Gold and cryptocurrencies are one of them. But I do think that as real interest rates rise here, there'll be some downside, probably around 1750, 1700 potentially in gold. But beyond that, I think it'll be time to buy that because, again, the rise in real interest rates is going to be limited. We're not looking for real interest rates to go back in the US to 1%. We're looking for them to stay at negative 50 basis points, which is still about 60 basis points above where we are. So temporary downside, and then I think we see modest upside in gold from there. So buy and dips, in short, is the way we're thinking about it.
Banu, we talked about emerging markets, but I didn't ask you specifically about China and whether you think there's a danger that with a policy mistake or too much regulatory clampdown, it could actually hurt the rest of the world.
So it's very interesting, Francine. We have to think about two different types of tightening in China. One's regulatory tightening, which really has an impact on China's own stock market, right? Particularly growth stocks, internet stocks. And that's what the market's extremely worried about right now. The other type of tightening is the credit tightening in China, where the market believes that we're going to get a little bit of stability near term, maybe some loosening. I don't think we're going to get much loosening. And in fact, over the medium term, Chinese policymakers want credit growth to grow in line with nominal GDP. You know, nominal GDP in China is going to be somewhere close to 5 to 7%. Credit is growing at about 10.5%. So you're going to see credit growth come down over time, and that will have an impact on global stocks, particularly commodities and therefore value stocks. And this is why we don't think that value has a medium-term sort of rationale to outperform growth, right? Even if growth is quite expensive, we think over the medium term growth will outperform value. So two types of tightening in China. Regulatory has an impact on Chinese stocks. Here and now, that's the big story. But eventually, by the end of this year, we think the market will be cheap enough, including internet stocks, to buy. Credit tightening, now that's something that we need to worry about for the next 3 to 5 years. I think Chinese policymakers are going to be reasonably conservative after really opening all levers and taking up leverage through coronavirus last year.
Banu, it seems like commodity markets having a tough time balancing strong demand with sticky supply. When does it clear out?
So usually supply delivery times clear out in a matter of 3 to 4 months. Now that period is already passed. So this time, of course, it's going to be longer. But what we have to be quite careful about is not thinking that this is actually going to be the big driver of inflation. Because again, if you just look at the weights in CPI baskets, oil has a much higher weight than base metals. But even oil doesn't have a very high impact on anything other than inflation expectations. And despite oil prices going higher, I was listening to your conversation earlier. What's really interesting is that at least in the US, you're not seeing a big pickup in inflation expectations. So I don't think commodities will have a big impact. I think they'll have a disinflationary impact over the next several years.
Banu, thank you so much. As always, Banu Baweja there of UBS. Coming up, UK payrolls climb above pre-pandemic levels. We look at job vacancies, and then we'll speak to Sir Martin Searle. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
trading revenues coming in better than expected, everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Apple rushes to block a security flaw in its Messages app after security researchers spot a so-called zero-click vulnerability. UK payrolls hit pre-pandemic levels as the government is expected to unveil a booster shot program later today. And protests break out as Evergrande's debt crisis deepens. The developer hires advisors to explore all feasible solutions to ease its cash crunch. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, the number of workers on UK company payrolls has climbed above its pre-pandemic level. The figures from the Office for National Statistics suggest that the labour market has remained vigorous over the summer despite a surge in virus cases. While vacancies have hit a record high, there's a mismatch, though, between the people out of work and the skills needed in the post-pandemic economy. Now, supply chains are showing signs of strain as key jobs like truck drivers remain unfilled. While Bloomberg's Lizzie Burden reports.
Brexit and COVID have worsened a trucker shortage in the UK that's wreaking havoc on supply chains and leading to shortages on shelves. Conditions for drivers are so bad that even offers of bonuses from supermarkets can't lure new recruits, and a testing backlog is slowing the flow of those who can be persuaded to sign up. With about 1.6 million people still on furlough and warnings of a spike in unemployment when government support ends on the 30th of September, how hard can it be to retrain as a lorry driver? I'm here at HGVT's Wolverhampton Testing and Training Centre to find out. How long would it take a person to retrain?
4 days training and then your test on the 5th day.
Super fast. So what's the problem? Why have we got this shortage?
There are issues that were building up prior to COVID, such as the ageing workforce within the driving community, people retiring and no new blood coming in. COVID has exemplified that from March 2020 to April 2021. No training could be done whatsoever, and it's taken the DVLA, who process the licenses, a long time to catch up on a backlog.
We're just not getting the drivers in that we need at the moment, and as we know, because of Brexit, a lot of the foreign drivers that we did have here have went back home.
And the problems with, with getting new blood in is that it's a relatively expensive course. It costs about £4,000, and that is putting these thousands of people who would become HGV drivers off, even though at the end there's some very well-paid jobs available.
It's because of COVID, because of me. I lost my job because of COVID. I'm actually enjoying it, and I'm being told by my instructor I'm doing really well, so yeah, I can't wait to get my test out there and get on the road.
The big question now is whether companies will permanently raise wages to attract workers, and most importantly, whether they'll pass those higher costs onto you, the consumer. If they do, you may see the Bank of England hike interest rates sooner rather than later.
Lizzie joins us now in the studio. So Lizzie, good morning, first of all, but how are these labour shortages actually affecting the economy?
Well, in the case of truckers, supermarkets are offering bonuses to lure new drivers, but you're still seeing shortages on shelves, and some retailers are warning that they could continue until Christmas. But it's not just truckers that the UK is short of, it's factory workers, it's fruit pickers. So across sectors in the jobs data today, we saw average earnings rose 8.3% in the quarter year on year. So the question is whether companies are going to pass that on to consumers, and we'll see in the inflation data tomorrow.
Yeah, so we had some data today, but that was quite significant.
We did. It's unbelievably good. The labour market defied the economic slowdown in August. It's despite the rise in coronavirus cases in the month. So you know that the number of workers on UK company payrolls is back above pre-pandemic levels. At the same time, though, vacancies hit a record high. The British Chambers of Commerce say it's a hiring crisis. So the next question is, what happens when furlough ends at the end of September? You've got 1.6 million people still on furlough in August. In this data, there wasn't much of a sign of a rise in redundancies. So then an even bigger headache then unemployment will be getting those people into jobs. That's what Andrew Bailey's warning about. You've got this skills mismatch. If the retraining takes time, the slack in the labour market will reduce inflationary pressures. It could push back when the Bank of England raises rates.
Yeah, there's always a problem with timeline, no matter how much you're trying to square the pegs. Thank you so much, Lizzie Burden, there with the very latest on the UK economy. Now, joining us to talk about the UK is S4 Capital Chairman Martin Sorrell. S4 Capital, digital agency that Martin founded to disrupt the advertising establishment. This week, it released results and also forecasts that its organic net revenue should grow 40% this year. So, Martin, thank you for joining us. Now, I want to talk about the UK, and then I want to talk about the rest of the world as well. What are your challenges right now in the UK? We talk about, McDonald's not having milkshakes, Nando's not having chicken, not having enough truck drivers. You're in a different part of the economy, but, talk us through some of your challenges.
Yeah, no challenges, Francine. They're opportunities. I mean, if you don't do anything about them, they become challenges. So, in the UK, get it in perspective, is under 10% of our business. We're a global business. We have 6,000 people now in 33 countries, 70% in the Americas, 20% in EMEA, and 10% in Asia Pacific. And geographically, we want to be 40-20-40. So China and India, no doubt we'll talk about that, are very much in the forefront of our plans, despite some of the difficulties, I think, around China, given US or the lack of US-China relations. But in the UK, our business continues to thrive, and we benefit, Francine, in a way, all the difficulties, I shouldn't really say this, but all the difficulties that we face around the pandemic, around supply chain issues, around inflation in the labor markets, all those challenges offer us opportunities in the digital marketplace. There are two tailwinds. Right,
but which means what? Martin, how?
There are two tailwinds. Well, the GDP growth, Francine, I mean, even in the UK, we're seeing globally 5 to 6%, UK roughly the same this year, next year 4 to 5%. So we're in a really, you'd have to go back to the 1970s and 80s to find 2 years of sequential GDP growth, either in the UK or the US or globally, to match this. Now, inflation is rearing its ugly head at the moment, but when you went back to the 70s and 80s, it was rampant. So that really accelerated even further. So that's one tailwind. The other tailwind is digital transformation. And what's interesting about that is that when the economy slows, when the global economy slows and the UK slows, and I have to say, the Brexit issues, I mean, you have this thing about lorry drivers and employment opportunities have surged above, I think, 1 million for the first time. Part of that is to do with Brexit and the lack of European labour in the UK labour market, and the inability of restaurants, for example, or haulage drivers to fill those vacancies. The issues around Brexit will rear their ugly head in 23 and beyond. Everything has been cloaked by the pandemic and the infusion of fiscal and monetary stimulus in the economy. So the UK offers, despite supply shortages, despite the price increases, offers colossal opportunity in the digital transformation area. And that's where we're in the sweet spot. We do nothing in traditional. And you're from your own experience with Bloomberg, Francine, that the traditional analog part of the market is slowing. I mean, I think when Bloomberg does its analysis, if I can be so bold, it should look at our industry as two industries. It's a tale of two cities.
Okay. But I know. But let me get back to it. I have a million questions. So, okay, if we go back to what the government you think should do to actually, deal with the supply shortage. So, if the effects of Brexit come at the forefront in 2023, it's an immigration concern. How does the government address it? And what's your take on the tax hikes?
Well, on the tax hike, Ferg, I thought it was, I said yesterday, I thought it was Cloud Kugelland to believe that the government continues to spend, quite rightly, to deal with the pandemic without there being some taxation response. Whether an increase in NHI or other taxation would have been the right response is another question. I actually think it wasn't a bad way of dealing with it. It's a bit sort of regressive in terms of its impact, maybe income tax or maybe other, but I think those taxes will rise. I mean, there's no way of funding the government deficit other than by higher taxation, at least in the short to medium term. Where I think
right,
the
but does it mean that
lies,
businesses?
Yeah.
Do you think businesses will leave the UK because of it?
Well, that's going to be a decision. We saw one business over the weekend, Pentland, that announced it was going to move to Ireland. I mean, it basically said that doesn't alter its tax pattern. But if I went back in to years gone by when I was at WPP, we did move offshore. We came back when the Conservative government made a commitment for the life of the Parliament, only 5 years, not to implement the measures for taxing offshore profits. So it's a very difficult one. I think, Francine, government policy in the short to medium term is inevitable in terms of raising taxation. Do I think that deals with the issues? No. I mean, I'm not a pro-Brexiteer, but the electorate has spoken. And it comes to the heart of the problem. I saw an article a couple of days ago, I think it was on Bloomberg actually, which talked about our trade with Germany having slumped. Germany was our 5th most important market. It's now 11th market. So within 7 months of exiting, we're seeing a change in trading patterns. I see it with S4. We've got to shift even more our pattern of trading away from Western Europe, continental Europe, to the North and South America, to Asia, to the Middle East and Africa. That's where our future lies. Liz Truss is trying to build free trade agreements. So made a little bit of progress, but not enough progress in the big economies that we have to penetrate as a nation if we are going to have a Singapore on steroids or a Singapore on the Thames, which is, I think, the direction which we have to go. But it's a long-term change. It's a long-term change, Francine.
Yeah. Okay, I have rapid-fire questions. We need to talk about the tech crackdown in China. What does it mean for S4 Capital? What does it mean actually for the digital space?
Well, you can't ignore China. It's the 2nd largest economy. It will be the largest economy. So I think what it means is you have to look carefully. The 14th five-year plan talked about cracking down on inequality. That's why they've taken the action in relation to privacy, data, gaming, and all those areas. So it's going to continue. President Xi will be there at least until, I think, 2035. So this is long-term direction. So you can't ignore China. You ignore it at your peril. What you have to do is figure out different structures. When I was at WPP, 100% owned structure, no local ownership. Maybe the asset managers industry or the asset industry is seeming to find some way of joint development in the Chinese structure. So I think you have to.
Could that not change? Do you feel, Martin? So you know China. Are the rules changing by the minute, or did you see it coming?
The rule. Well, I remember listening to a Goldman call where the analyst, very intelligent analyst, said, look, if you looked at the 14th five-year plan, you could see this coming. It's only a few months ago. So that direction you could see coming. I mean, you have to accept it at face value and accept that change is going to take place. And I think you have to alter the way you enter the market. We have a wholly owned operation in Shanghai. We're doubled up in January. We're looking at tripling up shortly in China because it's so important to our plans. We're not a strategically important industry, Francine. There are other much more strategically important industries which are in that bureaucrat's drawer in Beijing. Yeah. They look at every twitch. They don't look at every twitch in our industry. But I do think when I left WPP, we actually had negotiated an arrangement with 2 of the big tech companies to take a minority stake in WPP's Chinese operations. And I think there has to be structural change in the way that our clients and ourselves enter the Chinese market.
Martin, hold that thought because we're going to take a break and then we'll come back. And I actually want to ask you, is gaming strategic, the $1 million question for China? Martin Searle, chairman at S4 Capital. Now, coming up, a former London-based Glencore trader says he funneled millions of dollars to African officials. We discuss the Bloomberg big take story next. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, joining us back is S4 Capital Chair Martin Sorrell with the very latest on what we were talking about, which really, Martin, was all about, you know, what China was going to do, what it could do, what it means for the advertising world. Like, how does the way we advertise and which companies advertise through digital, through you, change?
Well, we've seen a huge change accelerated by the pandemic. I mean, if I look at it there are 3 buckets. Consumers, you yourself, me, myself, have become much more facile with the technology. We were probably a little bit afraid of it before we went into the pandemic, but we had to use it. So we're buying food and essentials online. We're educating our kids online. We're buying financial services and healthcare services online, et al. So that's one area. Secondly, in the media, as you know from Bloomberg, free-to-air TV continues to be under pressure from the streamers. The rise of Disney Plus, probably the most successful new product launch that we've seen to compete with Netflix and other streamers. The rise of, well, we'll see what happens with CBS Viacom. We'll see what happens with Discovery and AT&T's Time Warner Media assets. Digital outdoor replaces traditional outdoor. Traditional newspapers and magazines continue in decline, and the rise of digital magazines and newspapers. That's the second area. And then enterprises, companies, are embracing digital transformation to a level that they never did before. When Q2 of last year blew a hole in the profitability of companies, all resistance to change on the basis that don't disturb the status quo was removed. So we've seen a huge surge in digital transformation, two tailwinds, Francine. One we referred to before, which was the GDP growth, which will taper out in 23. The other is digital transformation, which will continue to accelerate as we go through 23 and beyond. So S4 is really a royalty on the growth of digital transformation, which, you know, in difficult times, like during the pandemic, digital transformation accelerated. So you will see that again, I think, in 23.
So, Martin, I know this is a little bit outside maybe your remit, but I know you look at everything and think about everything. You know, Apple is now rushing out some of its emergency updates because of spyware. How much do you think about hacking, spyware, and everything like that as everything moves on the digital space?
Well, it's top of the agenda. I mean, it's one of the biggest things. I mean, when I was at WPP, we had that infamous hack attack in the Ukraine. And it is extremely debilitating. We had first-hand experience of it. So that area is of critical importance. And in everything that we do with all our clients, and you mentioned Apple, it's one of our clients, you mentioned Facebook, Google, Amazon, all in our sort of top 10 clients, we're very focused on cybersecurity. And that, you know, if you were to say to me, what is the highest level of risk? Probably the highest level of risk is a cyber attack, hacking attack, a terrorist cyber hacking attack. That is very much up the agenda. So all these things are to be welcomed, or changes to be welcomed. as they're extremely important as the digital economy dominates on digital media, in the digital media industry, which is about a $1.7–1.8 trillion industry. If you're taking marketing services and trade budgets, well over half now is digital, and it's forecast by 2024 to be 70%. So cybersecurity, spyware, etc., are absolutely front and center to the development of the industry.
Sir Martin, thanks so much for joining us today. Martin Searle there.
Thank you, Francine. Thank you.
Capital. See you very soon. Coming up, a former London-based Glencore trader says he funneled millions of dollars to African officials. We discuss that Bloomberg Big Take story next. This is Bloomberg.
Ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, when Anthony Steinler left Glencore in 2019, he had 2 big secrets. For over a decade, he'd paid millions in bribes to African officials and intermediaries. And he was now helping a U.S. Justice Department investigation into the company and numerous former colleagues. Let's get more on today's Bloomberg Big Take. Our Energy and Commodities Executive Editor, Will Kennedy, joins me now. Will, good morning to you. So what does a court case against a man who was one of Glencore's most senior oil traders actually tell us about the company and the commodity trading industry?
It really throws a spotlight, I think, Francine, into the extent with which Glencore and the wider trading industry use these intermediaries to pay officials, often in developing countries, to help secure flows of oil and oil products that they could trade profitably. The details in the similar case that we're writing about today are eye-popping, hundreds of millions of dollars, which ultimately ended up in the in the hands of officials in West Africa. And our reporting says, for example, that the Nigerian oil minister, over a decade ago, became one of the key beneficiaries.
So, Will, what's Glencore and the rest of the industry actually doing to avoid the same thing happening again?
Well, I think that Glencore have said that all the people who were involved in the trades at the time of Stimler have left the company. But we shouldn't forget that one of the things that Stimler said is that he was not a lone wolf here, that, I think he said in his testimony that I worked with traders who were doing the same thing. So it was clearly a big problem. But the new CEO, Gary Nagel, who replaced Ivan Glasenberg earlier this summer, said that none of the people who were involved in these trades are with the company. And more importantly, and I think this is something we see in the broader industry, Glencore has said, we are not using these companies who acted as intermediaries to channel bribes to officials anymore. This is something that we've cut out of our business. And I think that's something that's broadly happening across the wider industry.
Will, separately, oil moving higher today. How far is that driven by the latest hurricane menacing the Gulf of Mexico?
I think it's part of the factor, clearly, that Hurricane Ida that happened in late August has had a very, very damaging effect. More than half of production is still out. This may well hamper the ability to oil companies' response and affect more refineries in the Houston area. We'll just have to wait and see as it works its way through. But we're looking at a situation where supply is constrained by those Gulf outages at a time when demand seems to be recovering very strongly.
Well, thanks so much. Our Bloomberg executive editor for energy and commodities, Will Kennedy. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Katie Lyons will be in New York. We'll look at the markets. Of course, it's all about that U.S. CPI data a little bit later today. I'm looking at the markets. They're undecided here in Europe, but slightly on the rise. The other focus, of course, on the IEA report and the price of oil. This is Bloomberg.
Boosters work, and they would definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? Should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky.
The U.S. is ultimately a service economy at its core. And so some of the input, the materials costs are not going to be insignificant, but they're perhaps less significant than other economies or other markets.
We like the rotation into cyclicals against this backdrop of still elevated inflation and very strong growth data, even though the growth is starting to decelerate.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Rising prices could mean trouble for President Biden's economic agenda. New figures out today are likely to show that inflation is still running at an annual rate of 5%. House Democrats promise a low-salt budget, while they say they will undo that cap on the federal deduction for state and local taxes. And Apple's emergency fix, it's come out with an update to stop no-click spyware from being installed on its devices. That happened as a company prepares to unveil the latest iPhones and Apple Watches. Well, good morning, everyone. Kaylee, especially good morning to you. There's quite a lot going on in the markets, but they're really all waiting that U.S. CPI and then oil actually gaining.
Yeah, oil is gaining, Francine, and we do get that key inflation read here in the U.S. at 8:30 a.m. Eastern time, so just about 3.5 hours to go. As for where we were in the Asian session ahead of that data, it was a bit mixed. You did have Japan outperforming. The Nikkei 225 actually closed at its highest level since all the way back in 1990. Chinese stocks and Hong Kong stocks, though, were lower, and once again, that was largely a tech story. The HS Tech Index falling another 1.5% or so today as you still have those fears around the regulatory crackdown in Beijing. What's coming next? And what does that mean for asset prices? Of course, one individual mover we continue to watch in China is Evergrande, the world's most indebted property developer. It issued a warning about liquidity strains, and also both it and the Chinese government are hiring advisors for restructuring. So that stock plunged nearly 12% in the Asian session. And in other asset classes, I just wanted to point to the Aussie dollar, your big underperformer in the G10 space today, weaker against the U.S. dollar by about 0.4% after some dovish comments from the central bank governor. He said no rate hike on the table until 2024. As for the picture here in the U.S., of course, it really is all about the inflation data today. We're not seeing a whole lot of action ahead of that, but futures are up about 1/10 or 2% on S&P 500 E-minis. You are seeing yields moving up a basis point in the Treasury market on the 10-year yield. It sits just shy of 134 at the moment. It is a slightly weaker dollar story today. And then, as Francine mentioned, oil, something to watch. You have, of course, the continued impact of Hurricane Ida. Still about half of production in the Gulf is shut down. Now Hurricane Nicholas has made landfall, and that has WTI crude north of $70 a barrel this morning, Matt.
All right, by the way, why especially good morning to you? Is it a special morning? Did I miss something?
Yeah, because we're looking.
Am I out of the loop?
Especially good morning for the markets. Matt, we're
okay. I thought it was a birthday or something that I had missed. What day is it? What day is it? It's the 14th of September. Okay. I am looking at a pretty mixed market here in Europe, really. You see gains on the IBEX. You see gains on the FTSE MIB. So the perifs are rising, but the core is not doing so well. The DAX up 0.2%. The CAC is down 0.5%. If you take a look at the Stock 600, it doesn't really make a huge difference, and we don't see a lot of moves in rates, negative 31 basis points, or currencies still stuck in a range 118, 120. What I am particularly excited about, Francine, is Marko Kolanovich's note from last night. JP Morgan strategist who says maybe the Delta variant surge is past us and the reopening trade could be back on. So now it's time to forget about the tech defensive play and go for the cyclicals, which, you know, for me in my world, the automakers, the big Siemens of the world, the factories that make stuff, I think that's pretty exciting. So I'm looking forward to see what we hear from others about that.
Yeah, the reopening revival, I like that a lot, Matt, as well. We did speak to the WHO yesterday saying that there's a Mu variant, which is of interest. Now, I look at what else is ahead today. At 8:30 a.m. New York time, U.S. CPI data expected to show annual growth in U.S. consumer prices staying above 5% in August for a third straight month. 10 a.m. New York, the SEC chair, Gary Gensler, testifies to the Senate Banking Committee. I know that will be interesting. Sparks will fly. The UK Prime Minister, Boris Johnson, then holding a press conference to set out the government's COVID-19 winter plan. At 11 a.m. New York time, he's expected to give the green light to COVID booster vaccines and outline who will be eligible for them. Apple also planning its biggest product launch of the year at 1 p.m. New York time. The company said is set to unveil its latest line of iPhones, and then they need to also address the spyware concern. And Vladimir Putin, guys, we found out just moments ago, having to isolate because people close to him have COVID. Now, we begin with the U.S. inflation data. Risks from the Delta variant and supply chain shocks have pushed costs higher. If consumer prices come in hotter than expected, the Fed, of course, could alter its taper timeline. Let's get straight to our expert, Michael McKee. He's our Bloomberg International Economics and Policy correspondent. Mike, what are you looking after for today? And can one data point actually change the Fed's thinking?
One data point probably won't change the Fed's thinking, but it could affect markets, and that's why everybody's paying attention to this, because the Fed follows the PCE index rather than the CPI, but the CPI breaks down where inflation is, and that's what everybody's going to be looking for. Right now, this is what we're looking for today in terms of the forecast. A little bit of a drop for both the headline and the core, but you look and you see that on a yearly basis, the headline's still over 5% and the core over 4%. That's a concern for the Fed if that doesn't go away. So what we want to know is, where's the inflation coming from? Now, the previous CPI reports have shown what the Fed believes to be transitory changes in prices. Things like used cars, car rental, airfares, hotels, motels. They call it the travel index, because those were in short supply and they raised prices because they dropped them so much during the pandemic. Now the question is, if those things flatten out, and you can see they did last month as the Fed expected, are we going to see other categories? Watch restaurants, food away from home, for example. If restaurants are having to pay up for more workers, they're going to have to make that up somehow in prices. The other thing that we want to follow is the reaction to all of this. Are we going to see consumer expectations rise? The Fed worries about inflation expectations. Yesterday, the New York Fed reported that 1-year and 3-year inflation expectations jumped markedly. That's not good news for the Fed. Whether or not it stays anchored or not is going to be the question.
What about housing, Mike?
Housing is the wild card here, because we've seen home prices go up 18% on a Case-Shiller basis here in the United States over the past year, but the equivalent in the CPI, owner's equivalent rent, has only gone up about 0.3% in recent months. Something's wacky there, and we expect it to start showing up in the CPI, and that could push inflation higher too.
I love the word wacky on television at 5 a.m. in the morning. Bloomberg's Michael McKee, thank you so much for waking up early for us. And last night, Progressive Democratic Congresswoman Alexandria Ocasio-Cortez used New York's fashion charity event, the Met Gala, to make a political statement. She wore a white dress with a message emblazoned in bold red, "Tax the rich." Now, AOC's not surprising statement comes as a deep division within the Democratic Party continues to emerge, and exacerbating uncertainty about President Biden's tax
This is
and
not a
spending
surprise to me. I
proposals.
was working on putting the show together.
Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from our D.C. bureau. So, Anne-Marie, AOC has also called the SALT deduction basically a giveaway for the rich, but we know the Democrats are looking to take action on that.
Yeah, it wasn't in the original proposal from the House Ways and Means Committee, but you hear from the gentleman from Long Island, Tom Suozzi, who basically has said for the past 6 months, no SALT, no deal. This is a very important SALT deduction. They want to raise that cap that was done away during the 2017 Trump tax credit and that redo of the tax system, because it's so important to these high-stake areas like New York, like New Jersey, like California, where you have heavy Democrats, but also very, very high tax brackets. It's very interesting because his colleague, Congresswoman Ocasio-Cortez, says that by doing this, it just helps those households which are high-income earners, but the likes of Representative Suozzi will say that actually it hurts middle-income earners. So this is something that will be a little bit of a fight between the Democrats, but we have heard from the House Ways and Means chairman saying that it will at some point be enacted in this reconciliation legislation.
All right, red carpet ready. Anne-Marie Horder looking like she could be at the Met Gala. We love it. Anne-Marie,
I wish.
You know, the focus, of course, the focus, maybe not at 5 a.m. The focus is also, of course, on California.
Yeah, certainly is. We heard from the president last night, and he was in Long Beach, California, and he was there to say no to the referendum and this recall of the governor, Gavin Newsom. And he just kept saying that the leader on the Republican side, Larry Elder, is a, quote, clone of President Donald Trump. So really trying to say into the state of California, if you vote for this individual or you vote to recall the current governor, then you would have someone who is not supportive of climate change. He said that the state would be going down the state of what's going on in terms of women's abortion rights in Texas. And this is going to be very interesting because this is, of course, 1 year ahead of next year's midterm election. So potentially what works when they're campaigning with the governor in California, they may try to replay next November.
Anne-Marie, thanks very much. Anne-Marie Horder there in Washington. Now turning to German politics, where we're less than 2 weeks from an historic election. Focus is already turning to the coalition options that could be on hand. Let's get to Maria Tadeo. She's here with me in the studio today to talk about a traffic light coalition. This is a phrase that we're used to hearing on a daily basis every 4 years here in Germany, but for our American viewers, it may be a little bit of a puzzle.
Yeah, it's complicated, but look at this. We're reunited. Beautiful day. We're in Berlin. I love it. You know, I'm having a great time with you, Matt, always. But, you know, when you look at the traffic light coalitions, what it implies is that it's the SPD, the Social Democrats, the Greens, and the Liberals. But, Matt, I'm not sure if you agree with me on this, but when you look at polls, they're so tight, and the margin of error, 5 points, you could really be in a situation where everyone gets around 20% of the vote. So this is very, very open. And what you see now strategically, which is very smart, is everyone is presenting themselves as we're very flexible. You know, we can work with everyone. And yesterday we had the Liberals kind of saying, you know, we don't have a fetish with Black Zero. We could be spending, and if it's for investment for the country, then we'd be down for it.
You know, I have to tell our viewers, there's a little, you're ribbing me a little bit, right, because of the AOC dress. And Maria and I were talking about the AOC dress this morning, and she was like, this is going to be the talk of the town. Like, this is it. And I was like, yeah, I know. We have it in the show. There you see it, Francine. So just in case you're wondering why there seems to be a little inside baseball going on here.
Yeah, I like that. I mean, I'm glad we put it in the show. We had that, and then I think we also had Natalie Portman, you know, with the names of Lost Her at the Oscars, or 2 years ago, everything to do with the name of female, of course, producers that were underrepresented, Kaylee.
All right, I'm going to pick it up here. Bloomberg's Maria Tadeo. Thank you so much joining us from Berlin, because I want to get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. Now, one mover to the upside was actually a downside mover yesterday. That is Albemarle, the world's biggest lithium producer. There is a strike now in its Chile operations, with workers now on strike in a second month, and they rejected a proposal on wages from the company yesterday. That took the stock down to its worst day since May. But this morning, investors seem to maybe think that sell-off was overdone, because the shares are up 2.5% in pre-market trading. Another mover to the upside, though not by that much, is Apple. You have a few stories in the works today. On the one hand, you have the revelations of spyware in the iMessages app last night. The company's rolling out updates to fix that. And then, of course, speaking of updates, they do have an event at 1 p.m. Eastern time to announce the new iPhone and new Apple Watch. We will all be watching that, and ahead of it, the stock is up about 0.4%. One downside mover to note, though, is Oracle. Reported after the bell last night, yes, its profit forecast topped at expectations, but revenue actually fell short in the fiscal first quarter, and there was a slowdown in one of its key cloud software products. So that stock is down about 1.8% before the bell, Francine.
Yeah, a lot going on actually with Apple because of the spyware. Also deciding whether it wants that 30% fee after the epic battle. Now, coming up later this morning, Playering Defense and Equities will speak to Christian Mueller-Griesman, strategist at Goldman Sachs. We'll talk about the reflation trade. We'll also talk about that JP Morgan note that Matt was talking about. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
US CPI print.
That's, I think, a key point for tomorrow.
Clearly that leads into when we feel you may start to see the taper.
The Fed is going to make up stories to fit their story, which is inflation is transitory. There's a lot of uncertainty about inflation.
Any inflation that is now in the system,
Any upside surprises?
particularly that surprises to the upside,
Can certainly hurt growth.
we have to think a little bit more critically about what higher prices from here do.
Demand-driven inflationary pressures.
The persistency of inflation.
To what extent there's a kind of a negative feedback, kind of a second-round effect.
A lot of that coming to play at the next Fed meeting.
It's a bit of a dangerous game.
An important set of U.S. inflation data looms, figures that could help, of course, determine when the Federal Reserve cuts down on stimulus. Let's get straight to Marcus Ashworth. He's Bloomberg opinion columnist. Marcus, I mean, I need to also talk about this in the context of a wonderful note that our Matt Miller, picked up on by JP Morgan, saying it's also the reopening revival because there's a belief in the markets that we're kind of over delta at the moment. So is the inflation data all that more important?
I'm not sure it is, actually. I think what the Fed's wanting here is a not too outrageous number. Around 5.3 will be perfect for it in the context it can move through that. And it's really the payroll number, start first Friday of next month, which is probably more important for them on whether or not they do kick ahead with taper, should we say as early as November. Now, personally, I think that may not be happening. I think we're more likely to be into the early part of next year before they really do taper. But a nasty CPI number is something which could bring that forward.
But what if we have good wage pressure, for example?
Well, you know, there's lots of things that are moving parts at the moment. Shelter is particularly the most important part. I think everyone's going to look into that. Really, what's going on with, you know, essentially housing and the various costs there. If that's starting to feed through, which there's some signs are, then that's something which could move on from the argument we've had of used car prices and all the things which really are transitory. If we start getting into the not so transitory stuff, then we are a little bit more under pressure, I suspect.
Marcus, Matt Mealy from Miller Tabak was on Bloomberg Radio with me and Paul Sweeney yesterday, and he used the word stagflation. Now, he wasn't saying it's gonna happen, but is there a concern in the market that we do see inflation as sticky and growth slowing down? Because the third quarter estimates have been reduced drastically.
Well, I'm going to say that if there is any stagflation, it's going to be transitory. So I don't think it will be there for very, very long. You know, yes, there might be a brief moment or a month or two where we get to, you know, we're starting to see some of the growth numbers, you know, that we've lost the sugar rush. And that's you know, perhaps some reasons why we're starting seeing some people worrying a little about growth. But I think it will kick back in by the end of the year. And I think inflation, we do need to see a great CPI number will give the confidence to the Fed really needs today, you know, not being above 0.4. If we get to see another 0.6, 0.8 number, then I think everyone's worrying that just all they see at the moment is nothing but beats on inflation. It would be nice to see a fail or a...
Yeah, well, the cappuccino index is like out of control. It's like up some 50% in the last like 12 days. Very good, Marcus Ashworth of Bloomberg Opinion there. This is why he's an opinion writer columnist. Now, we'll have plenty more, of course, on the data coming up in the next hour. Jens Nordvik, Exanta Data founder and chief executive officer. This is Bloomberg.
So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
From New York City. We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Crypto
You have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And Hurricane Nicholas came ashore in Texas early today. It's bringing torrential rainfall that is threatening to flood Houston and parts of Louisiana still recovering from Hurricane Ida 2 weeks ago. Nicholas was upgraded from a tropical storm hours before making landfall. It could dump as much as 18 inches of rain. China Evergrande has come out with a dire assessment of its financial health. The struggling property developer says it faces tremendous liquidity strains, and it has hired advisors for what could be one of the company's biggest debt restructurings. Just how much Evergrande's investors lose will depend in part on whether Chinese authorities and state-run banks take steps to limit the fallout. And the Litecoin Foundation admits it, quote, screwed up regarding an untrue press release about a partnership with Walmart. One of the foundation's employees retweeted the hoax, which was sent out by a press release distributor. It said that Walmart would start letting its customers pay with Litecoin. The creator of Litecoin, Charlie Lee, says his foundation had nothing to do with what he called fake news. And Matt, I know you were all over this story yesterday. It caught a lot of attention. But if you actually read the release from Walmart, it didn't really sound like something the company would put out.
Right. Well, I didn't do that until after I saw the fact that it was fake news. Then, of course, I was more curious and looked beyond the headlines. I was on my radio show with Paul Sweeney at the time, so we talked about this a lot. The other thing that I think is interesting, well, the price action in Litecoin can't be denied, right? It was up 33% and then came back down. The other thing I think was interesting, unrelated, is that Interactive Brokers is now going to allow cryptocurrency trading on its platform. That includes Litecoin, but obviously Bitcoin, Ethereum, and the like are going to be much more popular, much bigger volume for
Matt,
Interactive Brokers.
Yeah.
Yes?
I was going to jump in there because actually I also caught up with our expert Eddie van der Waalt on Litecoin, and he says what it really shows is pent-up demand, right? Is that if something like this happens, or we see like a real ETF based on Bitcoin in the US, prices will fly, and so it just shows that people are ready to go when and if it happens.
Well, and we saw Cathie Wood's fund is going to start investing, or at least it's allowed to. They put in their perspectives Bitcoin ETFs. There already are, of course, in Canada Bitcoin ETFs, just not yet in the U.S.
Coming up, we'll have plenty more, of course, on Bitcoin. We'll also talk markets with Christian Muller-Gleesman, strategist at Goldman Sachs. We'll talk about oil, we'll talk about China, and of course, we'll talk about the U.S. CPI data later.
is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Matt, we had that Bloomberg headline crossing the terminal about Vladimir Putin saying he needs to isolate because there has been quite a few cases around him. Now, I went back and actually looked, and he did say something to that effect yesterday when he was hosting a group of Russian Paralympian champions at the Kremlin. Now, a couple of facts on Russia at the moment. So, coronavirus deaths in Russia reached an all-time high last month. Less than a third of the population vaccinated. And what Vladimir Putin was saying is that he needs to figure out what exactly is happening with COVID so that he will probably have to quarantine because a lot of people around him are sick.
He's not the only one. We all want to figure out exactly what's happening with COVID. Let's go through a list of the world leaders who have gotten the coronavirus. We're looking at one there. Donald Trump has gotten it. That we know. Boris Johnson has gotten it, right? Bolsonaro has gotten it. Who else besides those three?
I think most of them actually have had it. No one's really had it that bad, apart from Boris Johnson, who spent a little bit of time also in the ICU.
I don't believe Frau Merkel has had it. Has Macron had it? Or Draghi?
President Trump.
Sanchez?
I think Macron has had it. I know. I need to do some research. It's a good point. It just depends on how badly you get it. So let's get straight to the markets with Kaylee. What are you seeing today, Kaylee?
Well, Francine, really we're all just waiting and watching for that CPI print here in the U.S. at 8:30 a.m. Eastern time. Ahead of that, European stocks are actually off of session lows. The Stock 600 just fractionally lower now. Your big underperformer within that benchmark is Basic Resources, but autos and parts actually on a tear today, so that may be what's helping lift the Stock 600 higher more broadly. Here in the U.S., futures are positive, just about 0.1% on S&P E-minis, while you are seeing some selling in the Treasury market, the 10-year yield up about a basis point to 133, 134, call it, on the 10-year. Of course, we're watching oil as now there's a second hurricane in the Gulf. Hurricane Nicholas has made landfall. WTI crude did cross above $71 a barrel earlier. Now it's trading at $70.93. As for some stocks moving in pre-market trading, with that lift in oil, you are getting a lift in some oil equities in early hours. Marathon Oil, Occidental Petroleum, each up a little more than 1.5%. Two movers to the downside, though, to note. One is Open Door Technologies. It priced an offering after the bell yesterday between $16.90 and $17.25 a share. That is a discount to yesterday's closing price, so it's down a little more than 4% this morning, trading at $17.01. And then Oracle also down the better part of 2% after disappointing results after the bell last night, Matt.
All right, so in terms of what we're watching in the markets, I mentioned the Marko Kolanovic note earlier from JP Morgan. He says it's time to let go of your tech investments that are defensive and rotate back into cyclicals. Because the Delta variant peak is past us now and the reopening trade is good. He says as Delta subsides and inflation persists due to supply frictions from reopening and accommodative monetary policy, we expect the reflation reopening trade to resume its outperformance. And I just thought this was really interesting, especially since we've gotten warnings from the likes of Goldman Sachs, from Deutsche Bank, from Morgan Stanley of late, that we could be in for a correction. Morgan Stanley's Lisa Shallot said maybe 10 to 15%. Joining us now to talk about this is Christian Müller-Glissmann, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. And I want to get your take on this. I guess the two things aren't mutually exclusive, right, Christian? You could believe that a correction is, that we're due a correction, and you could also believe that it's time to rotate back into cyclicals. How do you see it?
Well, I mean, you know, since the second quarter, you've seen a major reversal of the reflation trade, but the S&P has made all-time highs. So you have your answer there. I think you can have the index level behave a bit different to the reflation trade because especially the S&P has a lot of weight in these secular growers that have kept the market going. And if you look at the last 6 months, pretty much since the reflation trade has started to unwind, the Sharpe ratio for the S&P 500 in the last 6 months has been close to 2. Which is one of the highest levels since World War II. So from that perspective, if the reflation trade resumes, especially for U.S. equities, it's going to be a tough climb on a headline level. And I think it's very similar to Q1. You might remember this, like Q1 was actually a relatively volatile period for the S&P, even though underneath the surface, the market got quite a bit more bullish on reflation.
What about for European equities? I mean, U.S. equities have outperformed. And European equities may have a little bit more value, especially on the cyclical side.
Listen, exactly right. I think, you know, the U.S. equity market has outperformed since the second quarter, exactly because of the quality secular growth leadership. So we would expect into the fourth quarter, and we do agree, of course, with this idea that there could be a bit more reflation optimism into the fourth quarter. In that type of setup, you would expect Europe, Japan, maybe even emerging markets do much better. I mean, the big outlier since the second quarter has been emerging markets because of China, of course, and Japan. And Japan has now seen a significant rebound with the kind of tailwinds on the domestic political side. EM has also rebounded a bit. Europe, at the margin, has actually done quite well. I mean, surprisingly, and we see that not only in performance, where I think European equities have held up all right with the US, but also in flows. Fund flows into Europe have been remarkably strong. So at the margin, you could argue maybe Europe is not going to be the fastest horse just based on the fact that it actually has been doing quite well.
So, Christian, first of all, what exactly is priced in the equity markets? And is it, now too late for investors to increase their equity exposures?
Yeah, listen, I think it's a really good question. I think at the margin, we've seen a significant amount of pessimism underneath the surface within equities. But if you look at kind of the index levels, valuations are high, especially in the US market. And if you look at positioning and sentiment, it's also high. We just wrote a research note on that at the beginning of the week. And if you look at fund flows into equities, they've remained positive. If you look at equity allocations for multi-asset investors, they're close to all-time highs. So at the margin, people have stayed long equities, and by virtue of equities having outperformed other assets, their allocations are quite high. So as a result of that, we kind of are overweight equities, and we do actually think the street and investors are overweight equities as well. So especially important into year-end will be which equities to avoid these incredibly popular, overpriced areas of the market, which are often having a quality secular growth bias, and that might even not be at risk from the Delta variant, that might be at risk from taxes, from kind of changes on the fiscal side, from kind of unwinds on positioning.
But Christian, overall, so when you look at some of the China concerns, I know they started weighing on emerging market sentiment. Do they have the possibility to infect global equities?
I think so far everything we've seen, and we've looked at it quite a bit, shows that the China issues are much more insulated than in previous crises, like 2015-16. So it feels like at the margin, these are domestic issues affecting domestic assets, and clearly we're dealing with a very weak patch with regards to China growth because of the zero tolerance lockdown restrictions. But even those haven't really had a major impact on global markets because, as you know, with these COVID restrictions, the market often looks through them to a certain extent because we know the end game. And the end game is getting nearer. I think we do feel that the COVID wave in China is starting to peak. And from that perspective, at this point, we don't really see global kind of spillovers from China to broader markets.
Christian, I want to go back to that TINA idea you were just speaking about. Obviously, TINA is an easy case to make when the 10-year yield is hovering in and around 130, as it has been for some time. At what level would yield start to become problematic for equities again?
Yeah, I mean, as always, this is actually not a completely linear relationship in the sense that I think if yields go further lower from here, they can actually be negative for equities because we are now currently at an equilibrium point where I think markets have priced a decent amount of growth worries, which has anchored the back end and has actually led to a curve flattening. It has anchored real rates, and that has been good for secular growth. But we know that if you push down rates further down from here, the growth worries might actually start to outweigh how much bond yields can go lower from here. So I don't think lower bond yields from here would be a good thing. And in terms of your question on higher bond yields, it really depends on the composition and the speed. And I think if it's led by break-even inflation, markets have been dealing with it quite all right. If it's led by real rates, it is usually a bit of a drag, especially on the secular growers. We know that the duration of the US equity market is much longer.
Christian, thanks so much. Christian Muller-Gleesman, their Managing Director and Portfolio Strategy and Asset Allocation at Goldman Sachs. Coming up, Apple unveils its new iPhone and Apple Watch today. They're also dealing with spyware. We'll get more on this next. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg. Apple holds holds its annual product launch today, where it's expected to unveil the iPhone 13 and Apple Watch Series 7. Joining us now is Ramon Lamas, Research Director for Mobile Devices at IDC. So Ramon, I have to start on a kind of personal note, because I was standing right here on this set on Friday and shattered my Apple Watch when I was trying to put it on. And everybody told me, wait for the new one to come out before you get another one. But I didn't have faith, because of all the supply chain issues, that I would get a watch on my wrist anytime soon. As Apple announces these new devices, how much of a problem is that?
I think, Apple is usually one to even out their supply chain and have stuff ready shortly after, announcements come out. So here's the thing. When you shattered your watch on Friday, you got caught in that very precious window in between, should I replace or shouldn't I replace? So I can tell you this, it's going to come soon. And when supply chain is, ready to go, hopefully, we're going to see some kind of announcement that says, this is going to be available probably on, middle of next week, end of next week, and you're going to be in pretty good shape. But, there's going to be a lot of other Apple goodies just in case you're looking to replace, I don't know, perhaps an iPhone, perhaps getting some new AirPods.
So, Ramon,
there's going to be some there.
So I went out and bought a replacement watch on Friday. I couldn't wait that long. So what did I miss out on? What is going to be different about this watch and this iPhone?
Look, let's talk about the watch first, because we're answering a couple things. One of the things is that, we're expecting a huge, or at least a significant redesign. You're looking at a much bigger watch. Well, I shouldn't say much bigger, but, a slightly larger, watch face. Something along the lines of, 42 millimeters, 45 millimeters, which is not going to seem, much, when you read that on paper. But when you look at that, when you have it on your wrist and you say to yourself, wow, this screen really pops and I can see a whole lot better, that's going to be a treat for you. And then after that, if you take a look at all, what that experience is going to be underneath. Yes, you're going to see a lot of health and fitness. You're going to see a lot of other quick shortcuts and notifications and a couple other surprises, around watch faces and what we're able to tell you about your health. Okay. But, beyond that, I think, this is going to be one of those times where it's going to be a very significant, step forward in terms of the short history of the watch. I mean, look, we're only about, 7 or 8 editions in.
Exactly. I mean, so there's a lot of room for improvement on the watch side. In terms of the phone, Ramon, I mean, what doesn't it already do? It seems like the only thing they can ever improve really is the camera. What are we going to get with iPhone 13?
Exactly. The camera is going to be one of those pieces that they always emphasize year in and year out. And one of the things that we're hearing is something called image stabilization. So if you're like me, who's trying to take a video of your kids as they're riding their bike down, the street for the first time, instead of seeing something like this, it's going to be a lot smoother. So that's going to be one of the treats they have around the video. On top of that, expect some improvements around the processor. This is something that we hope to see each and every single year, because what we expect from our devices year in and year out, it's making our old iPhones look incredibly quaint. So that engine under the hood is not only going to be able to power your camera that much faster, but it's going to make the entire experience a lot smoother, because, who wants a slow iPhone? Who wants a choppy experience?
But I think a lot of people are going to be able to hold on to old iPhones, right? Because these things are so good at this point, Ramon, that you don't need to upgrade every year or even every 2 years. Your experience with an iPhone, say, 10 is a lot different than your experience with an iPhone 4.
Absolutely, and I think you hit the nail right on the head, because it's that phrase, good enough. When you talk to Joe and Jane Smith on Main Street USA, take a look at what they're doing. They're making phone calls, they're sending texts, they're taking photos and videos. A smaller portion, nonetheless significant portion, is doing more high-powered stuff around, gaming, augmented reality, multitasking, productivity, etc. So if you're one of those power users who's lives and dies by their iPhone to be connected to their company or have their own business or something like that, this is going to be the iPhone for you. But if you're among the legions and the millions of users we're having this iPhone, this is going to work.
Yeah, but how much am I going to pay for my new iPhone? So there's a chip shortage. Are prices going to skyrocket? Am I going to pay 30% more than I did my last iPhone?
Apple's going to be trying to be very sensitive to that. There will be some high-priced iPhones. Make no mistake about that. I mean, if you took a look at that iPhone Pro Max, that's going to be hovering around that $1,500–$1,600 price point, at the most. But if you're looking at, let's not forget, they have expanded that entire lineup. So you have your iPhone SE, SE short for special edition, and for a lot of folks, that's going to be the iPhone quote unquote good enough to do a lot of the basics for you. That's where you can save some money too.
All right, Ramon, thanks so much. Ramon Lamas, their research director for mobile devices at IDC. Now, stay with Bloomberg for coverage of Apple's product launch later today. You can, of course, follow the virtual presentation on our top live blog, TLIV Go, starting at 1 p.m. New York time. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Who was betting on Elon Musk? And so far, and most people bet against him. We invested $380 million in between 2014 and 2016 after thinking that we shouldn't invest in it, and was 1.5% of our assets at the time. And we made $4 billion in profit in so far, and I think we're going to make another triple, maybe 4 times over the next 10 years.
Investor Ron Barron there of Barron shares more of insights tonight on Bloomberg Wealth with David Rubenstein. That's at 9 p.m. in New York. Our very own Tom Keene, looking at wealth as well, co-anchor of Bloomberg Surveillance, now joins us. Mr. Keene actually updating us on the number of Apple devices that the Keene household owns. And you're looking at a great chart. Out of control. So is the chart.
Yeah, it's a big day. I mean, this is the consumer side of Apple. They've got the computers and offices, what creative uses as well. But I guess this is all about the iPhone today. I remember, Fran, standing on Fifth Avenue a zillion years ago with Lawrence Haverty, one of the smartest guys in the business, and the zeitgeist was the iPhone would fail. The iPhone is no good. There were all sorts of articles out. World's coming to an end, and Larry just laughed at him. Let's go to the chart right now. And it's Apple. I use this chart with the anniversary of Steve Jobs' death, and up we go. The red circle, 2007 iPhone. I don't know, Matt, 4, 5, whatever it was. Dead, fail, financial crisis, and we've gone from $5 to $149. I guess the iPhone's doing well at a 32% EBITDA margin.
One of the things I remember back during iPhone 4, iPhone 5, and that we've seen recently with PlayStation 5 and the new Xbox, they like to hold these things, they like to hold them back and don't let consumers have enough in order to boost the hype. Does that work, you think, Tom? Is that a good strategy? Because they may have no choice right now with the chip shortage.
Well, the chip shortage is valid. There's a huge issue here about A14 out to A15 chip. And as you know, Matt, I'm very, very chip in CPU-centric. I mean, I think the underlying engineering of the Apple products is the sauce. It's a secret formula that they have, that with the aesthetic. But I don't think there's so much holding back as, yes, they have a valid chip shortage. It's a little bit secret, to be honest. Mark Gurman's our expert on that. But far more, I would say, it's just a normal rollout. Surprise, the calendar, it's September. The Lacroix house, they need 3 iPhones.
Well, yeah, they do. I mean, 3 for each child, Tom. Come on.
The 2 kids and Lupo. Lupo needs, and Lupo doesn't need the big one, but Lupo can go with one smaller.
The small one. There you go. And maybe an Apple Watch to make sure that, he gets out on time. Tom Keene, thank you, co-anchor of Bloomberg Surveillance. Now, this is what else we're watching today. And, of course, CPI on your mind, Kaylee.
It is on my mind, Francine. Maybe they should add the price of an iPhone to the CPI basket and gauge, what price increases consumers are facing. But yes, we do get that read for August coming up later on today at 8:30 a.m. Eastern Time. We're looking at a 5 handle on the core metric for the year-on-year number. Of course, when you back out food and energy, or excuse me, on the headline level, when you back out food and energy, get that core metric, we're looking for 4.3, a little bit lower, obviously, on the month-to-month, 0.4 and 0.3 reads respectively. But obviously, it's about, as Mike McKee was telling us earlier, Matt, the breakdown of what exactly inflation is coming from. We'll be interested to watch housing and, of course, restaurants today, Matt.
I think they do have Apple hardware in the basket. I remember famously a journalist telling Ben Bernanke back in the day, you can't eat an iPad, right? So because Bernanke was saying the prices of these things has come down so significantly, or at least the power has gone up while the price stays the same. I am going to be watching Gary Gensler, the SEC chair, testifies to the Senate Banking Committee today, and he's got his sights set on corporate bonds, which I think is absolutely fascinating, going beyond, a frothy equity market or concern about crypto. And the non-treasury fixed income market is so huge. We're talking about $10, $11 trillion that it's really worth watching.
Yeah, I'll be also watching what we hear from the UK Prime Minister, Boris Johnson. So he's actually discussing booster shots in a press conference, 11 a.m. in, New York time. The focus here, of course, is on booster shots, so third, but actually there's been quite a lot going on in the UK. So first, we did hear just 2 days ago that they were thinking about possibly introducing Green Pass, which means that you have to show your vaccination status before going to stadium. They scrapped that. Instead, they'll also give, children aged 12 to 15 in England one vaccine, and they're actually introducing this third booster shot for the vulnerable, something that the WHO absolutely do not want because they say it takes away vaccines from emerging markets.
Yeah, that's the argument, right? And we heard yesterday from a team of a panel of all-star scientists, whatever that's supposed to mean, that a lot of people don't need a third shot, and they should be giving those shots to parts of the world that haven't even started yet.
Right. Yeah, it'll be interesting to see who gets them and these booster shots and how quickly. Bloomberg Surveillance, more of it up ahead. This is Bloomberg. after 15, 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's the end of the Merkel era in Germany. Election of new leadership is coming. Join Francine Lacroix as she speaks with some of Germany's most powerful voices before the votes are cast on Germany Decides CEO Briefing, a live special Wednesday on Bloomberg Television and Radio.
As we kind of started the reopen earlier this year, the bar for the data was high. And I think it was very difficult for the data to live up to that bar.
The problem with this recession is that most of our policy tools are already exhausted.
The market is not ready for the market going up. We've had massive amount of inflation in this era of easy monetary policy and zero interest rates.
The messaging of what they see going forward and what tapering means will be very, very important. Right now, the market doesn't care.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Inflation Day in America. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market up too. We are totally unchanged on the S&P 500. TK 2 hours and 30 minutes away.
John, you look at the ECO screen. That's where I go to look at all the economic data. And I'm sorry, this screen, John, doesn't look like the last decade. Even the last 2 decades, 5.3% year-over-year CPI. That's something new for America.
Transitory looking less transitory. This from 3M in the past 24 hours, Tom. Despite taking price up, we are seeing inflation outstrip price. You said companies adapt. They've been adapting, but they've got some problems going into year-end, Tom.
Well, maybe. I'm going to go there, John. Yeah, I think a select group of companies will, but what's going to be interesting and what our listeners and viewers want to do is parse out the people that can adapt to this higher inflation. They could be the winners, higher revenues, their margins stay good.
Lisa, these supply issues, they persist going into the back end of this year.
And this is really Savita Subramanian's argument from Bank of America, basically saying that the margin pressures will get increasingly real. So far, a lot of these companies have been able to pass along the costs to consumers. But what I am focusing on is that wages are not keeping pace, John. So at a certain point, that just means that sales will start to fall.
You saw the downgrade on Nike from BTIG yesterday, Tom. Did you miss that one?
I missed that one.
Downgrade to neutral on rising supply concerns. This is a real thing now. This has been the issue. Mohamed Al-Aaron out in the FT, the print edition this morning. Demand's fine. That's not the problem. We've been used to a world where demand is the problem, deficient demand. And now we're talking about sufficient demand, but problems with supply persisting. That is the #1 issue right now.
What's the Venn diagram of supply worries over inflation worries? I'm not sure how linked they are. Inflation just seems to be somewhat of a separate beast.
We can talk about job openings a little bit later, Tom, and the cost, the price that it's going to take to solve those labour market issues. We'll do that with Jens Nordvig of Exante in just a moment.
He's magical. It's good to have him.
I know, he can hear us too. Yeah. Let's get to the price action on the S&P, up a single point on the S&P 500, totally unchanged on the S&P. In the bond market, yields higher by a single basis point to 133.77. Tom, we could do the Nicki Minaj tweet We could do the AOC dress.
What's amazing, the best thing about the
bond market.
Look, the Nicki Minaj tweet is not appropriate for family radio and family TV. But what's great about it is Ian Bremmer responded to it.
Did he?
I mean, that's all that matters.
In the FX market, euro dollar. I'll move on quickly. Euro dollar 118.14. Lisa, euro dollar unchanged this morning.
I love that you pit the bond market versus Nicki Minaj at AOC's dress at the Met Gala. Definitely a way to really sell the bond market for its fascinating dynamics right now. 8:30 a.m. It is the all-important number of the week, the U.S. August CPI figure. The expectation is month over month for 0.4 of a percentage point increase, which is a slight deceleration from the previous month, but nonetheless still a rise. And really what I am watching is how this compares to the increase that we've seen in wages. It is outstripping that. This concerns me, and it should concern the Fed. Basically, even as you get consumer prices, as they go to the drugstore, as they go to the grocery store, as they pay their rent, everything is going up, and yet their wages are not keeping pace, less than 4%. If you take a look at the Atlanta Fed wage tracker, and this is something I'm sure they are watching for. 1 p.m., Apple, I know that Tom is watching this, is going to unveil the iPhone 13 and Apple Watch Series 7. We would all want to be watching these products. However, really front and center is their role as a services company following the Epic ruling with respect to how they market and how they display other podcasts, other gaming aspects, how much revenue they really can derive from some of these services. Meanwhile, it is gloom. However, it is what people are focused on. And then tonight at about 10 p.m., excuse me, in New York, over in China in the morning, we do get the August retail sales, industrial production, property and employment data, a data dump in China at a time of slowing growth and growing concern about how the leverage is getting pulled out of the system with Evergrande front and center. And really what I'm focused on is the deceleration in the property market over in China, John, especially due to Evergrande's imminent insolvency. This is at least what people are
John,
expecting.
I'm focused on strong renminbi. We've had a couple days here of a 644 renminbi. It's not a breakout to new yuan strength, but there it is.
It's been really stable, Tom, in the face of some real issues, and that's been the remarkable story coming out of China, that we haven't seen more of a mess in many ways.
Do you see our team on radio? You got to see this. We're just vamping here on renminbi, and in the control room, they were up all night watching the Met Gala, and they nail it.
I know you want to get there. Should we just do it?
They nail it with the yuan. No, we got Jens Nordvig. He's more important, but they excuse me.
We're doing it. Okay.
The AOC on radio, you got to see AOC's gown, tax the rich. This is a 61.2% marginal gown, John. Zero Hedge calculates the marginal rate in New York City with the new proposals is they're going to take 61.2 cents, John, on your $5 million a year.
Thank you, TK. This is Congresswoman Ocasio-Cortez attending the Met Gala, wearing a lovely white dress. Fantastic. If she wants to go there, she can go there. Don't have a comment on that. TK, you went exactly to where I want to go. We need to have a smarter conversation about this. The top 1% in the United States of America pay 40% of the federal income taxes. That's the data. They're the statistics. You can't argue with them. We need to have a smarter conversation about how to address an issue which a lot of people are talking about. And a simple slogan, it might work with the politics, Tom, but when it comes to the numbers, it does not get there.
I'm going to go to Joe Matthew. The smartest conversation is going to be how badly do the Democrats want to lose the House, lose the Senate, lose the presidency. The sum of these taxes really buttress up for a lot of people against agony.
Anne-Marie Horden will be joining us a little bit later this hour. In about 15 minutes, she's back from vacation.
Was she at the gala?
I don't know. We'll find out. Tom Keane, we'll find out. And we'll avoid that Nicki Minaj tweet as well. Jens Nordvig joins us now, Exante Data founder and CEO. Incredibly patient man. He's still with us. He sat through all of that. Jens, good to catch up. 8:30 Eastern Time, CPI in America. What are you looking for?
So I think the key thing is whether the price pressures are broadening, right? So we've already seen these crazy categories, used car prices going through the roof. That's going to eventually stop, right? So the key thing to watch for now is whether the broader set of prices is starting to go up. And you can look at median measures, like you're sort of trying to look at all the categories together. And there we've started to see some movement in the last couple of months. If that continues, that's a really important signal for the Fed that this is not a transitory thing. It could be really turning into something much more broad-based.
So when do we start to get a sense, Jens, of whether this is transitory or not? I hate using the T word because it's so loaded, but can we get some sense of when CPI becomes a problem for the Fed next week?
Yeah, I think the Fed has already started to change their signaling, right? So they have talked about inflation expectations going higher. We had the New York Fed survey inflation expectations came out yesterday. going yet higher. Again, we're about 4% on the 3-year measure there. So 3 years not totally transitory. So those are the things that they're starting to look at. So I think the narrative is starting to change. And I would also say in relation to markets, the way the market is responding to inflation surprises is starting to change, right? We had a period where the market was definitely buying into the transitory narrative and they looked through the upside surprises. And that's kind of changed since June when the Fed narrative also changed. So if we have an upside surprise, I think the market is going to pay attention. And that's a little bit different from before June, where the market was sort of very much buying into the Fed narrative. Not so much anymore.
So how is this responded to in the market, given the fact that at a certain point, higher costs are disinflationary if wages are not keeping pace?
Well, so I think we have to look at the wage dynamics and the inflation dynamics together, right? And I think it's actually interesting that you're seeing a little bit of the same pattern in the two data sets. In the CPI data set, as I mentioned, it is no longer just the autos and that kind of stuff that is moving up. And in the wage data, you're also starting to see that the median wages are starting to sneak higher, right? So initially it was just the restaurant workers and so forth. And now it is starting to be broader. It's just starting, so it's inconclusive. The Fed is certainly not going to say, oh, it's a done deal, something much more broad is happening. But that's what's starting to happen, and that's really important. If that
Jens,
continues.
can we get the conviction FX call from you right now? What is it, Jens?
Well, so I think actually if you look around the world, you have a lot of places where the Delta concerns have played into price action in a forceful way. And that is starting to come out. So there's places in Asia where you've had mobility really tank as a function of Delta waves, and that's starting to reverse. So I would say recovery in those currencies as Delta get pushed in the background and they just get access to a huge amount of vaccine is probably the next theme in FX markets to play out.
Thank you, Jens, for your patience this morning and for being with us as well. Jens Nordvik there, of Exante Data, the founder and CEO. Amazon has a plan, Tom, and it has the number 18 in it. They confirm plans to hire 125,000 employees in the United States. And Tom Keene, it comes with a starting average pay of over $18 an hour.
A couple of weeks ago, talking about college as well. John, this is a fundamental, foundational headline, and I'm sorry, this is massively optimistic about the shift to technology. I'm sorry, that's a ginormous number, and that shifts the labor calculus for everyone across America.
Do you think that gets it done? Do we have to go from 18 to 20? Let's frame the debate right now. We have job openings in America pushing 11 million, Tom. Numbers we've never seen before. And the supply isn't coming through in the way that many people would like it to. Does 18 get it done?
I think
Does it need to go to 20?
Labor has been in doldrums. It's been widely understood for decades. Maybe it's a new decade where labor share begins to increase simply because of the microeconomics of labor.
Lisa, that captures the conversation of the moment.
It captures the conversation. What else does is the fact that the lower income members of the employment force have been seeing the biggest increases, the biggest pace of increases in their salaries versus higher income individuals going back to the 1990s. So we're seeing a real bifurcation here in how wages are increasing.
They're the benefits of running a hot labor market, that we can start to see these kind of things happen. Will the Federal Reserve be overwhelmed by a number that comes out at 8:30 Eastern time? That's the big question. CPI into year end. We'll get CPI, the monthly data, in just a moment. A little bit later this morning. Tom Keene, we've covered so much. You want to do the address again?
It's magic.
Up 4 on the S&P, advancing about 1/10%. Yields up a basis point. 133.60 on 10s. Inflation day in America. A beautiful morning in New York City. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. Hurricane Nicholas came ashore in Texas early today. It is bringing torrential rainfall that is threatening to flood Houston, and parts of Louisiana still recovering from Hurricane Ida 2 weeks ago. Nicholas was upgraded from a tropical storm hours before making landfall that could dump as much as 18 inches of rain. Now, how